So let me start then where we have stopped. You know where we have stopped with last time. Okay, just to quickly go through, right? What we have learned last week, right? This is a short-term course. I think most probably for 6 weeks or so. I will take today, and then I'll try to finish it off today, and I may come again for another session for some to do some other job, another area. I think from next week, Mr. Yas will join with you. All right. Okay. So what we intend to discuss in my two sessions, what is financial system and component of a financial system, and role of financial systems and stability and financial crisis. So that's the area we are going to discuss uh, with you all. And then, of course, we started, in fact, last week discussing what is the financial system. And, it is important. It's like I explained to you, it's like a human body, right? It's like a computer systems because our entire financial uh, uh, mm, systems may be activated by as a system. Then we discuss in detail some of the financial systems component. I think we have discussed the central bank as our regulator, and Securities Exchange Commission will regulate the stock market, unit trust companies, and credit rating companies like that. So insurance board will discuss about the insurance business, and central bank, of course, you well aware, discuss about the banks. Then we discuss how the central bank was established under Monetary Law 50 of 1949, and Exeter is the person who from America who came to Sri Lanka and pioneered to establish the Central Bank of Sri Lanka. And then we have another one under Banking Act as well as the Finance Act 42 of 2011, and it will cover the finance businesses act like organ companies. Then we discuss leasing companies and blah blah. Primary dealers, money exchange, all are regulated by the central bank. And then we discuss the objective of the central bank, and it is an important role need to be played by them, and for especially the financial system stability. And they are to they have a separate uh, interim committee, financial system stability committee, to look after the Sri Lankan uh, financial stability and recommended to the um, control to the uh, monetary board to take appropriate actions to achieve the two main objective of central bank, that is price stability, economic stability, and financial system stability. So these are the three important functions of central bank for Sri Lanka, as well as most of the other central banks in the world also achieving these two objectives, right? Now, in order to achieve these objectives, and we discuss central bank carried out certain functions and the co-functions as well as the agency functions. And we discuss a lot of co-functions we discuss in detail, conducting the monetary policy, exchange rate policy, foreign reserves maintaining, macroprudential surveillance, licensing, regulating, supervisions of banks and other non-financial sectors activities, right? There are so many activities usually performed by the central bank in order to achieve their two main objectives. Then we have, apart from that, the central bank, I told you these are the functions, earlier functions, only be carried out by the central bank, right? And but agency functions, central bank is carried out as an agency. What do you mean by an agency function? That means basically central bank at behalf of someone. Now, who is the behalf of someone is usually the government, right? If the government want money through the central bank, their public debt department, they collect some money through selling treasury bills and treasury bonds. And also, I told you, and the main functions is employee provident fund, where the large superannuation fund maintained by the Central Bank of Sri Lanka is employee provident fund. Then the balance of growth and blah blah intelligence unit, FIU, also not to have any unwanted activity like money laundering, terrorist finance. So you don't want banks to involving in cleaning dirty money, right? So these are the two main functions carried out by the Central Bank of Sri Lanka, right? In order to do that, we discuss central bank may have some sort of independence, transparency, and accountability, right? Mind you, central bank can't say. I mean, if we took a wrong decision, which is very difficult to rectify because those are the decisions they're going to take for the country, right? Therefore, they must have a accountability for what the action they have taken. But in order to also to take actions, or in order to take some responsibility and accountability, mind you, another important thing is what is other important thing is they need to provide the adequate, but they we must provide them a adequate independence, right? That's also important. Without giving any independency, and it is unfair by them also to carry out. Okay, right. Then we discuss about the Securities Exchange Commission. Well aware, I told you recently. We have changed the Securities Exchange Commission Act, and with more power, and that was parliamentary passed the bill, and it was enacted now. So we discussed under that. Then we discussed the Insurance Board of Sri Lanka activities. So then we went into discuss about the financial institution. Now what we are now doing, I'm just going to take a quick brush through what we have learned last week, right? So I'll explain to you in detail what are the banks in Sri Lanka. So banks in Sri Lanka can be divided into two: commercial banks and licensed specialized bank, licensed commercial bank, and then we have around 30 banks in Sri Lanka, and we have 11 foreign banks, and also we have a specialized bank, 6 in Sri Lanka. Specialized Sri Lankan banks mean they cannot operate current account, and some limitations of doing the foreign currency business. So those are the main differences with compared with the licensed banks and commercial specialized bank. Then we discuss our total asset base in Sri Lanka in the banking sector. As at today is roughly around 27 trillion rupees, our asset base. Then we discussed little bit of regulations and supervisions of finance companies. Sri Lanka, we have around 39 finance companies. Those are covered under 42 of 2011 Finance Business Act. And we are, even though we talk about last time, our finance companies may be too many finance companies. Most of the companies may have some liquidity problem and meeting capital adequacy requirement and meeting the central bank requirement. So the finance companies at the moment, except for 10 or so, others are having some sort of a problem. So that is why central bank is recommending those finance companies to consolidate, right? Consolidate means join together, right? Rather than working alone, then you may have some sort of a what you call some sort of stability in the marketplace. If any finance companies collapse, you must be aware there is a spreading impact. That is what we call contingents, or sometimes we call contagious impact. effect. That means පැතිර යාමේ අවදාන එකක් ගන්නවා අනිත් එකට ඒක නිකන් හරියට කොවිඩ් වගේ තමයි. Right? අනිත් එක්කෙනාට බෝ වෙන්න පුළුවන් හැකියාව වැඩි because why people are little bit reluctant and with a little bit of lost the trust and confidence, and they may ask for the removal of the money from the bank. Then banks and finance companies, if all the customers are going to withdraw money at once, always there is a big problem, right? No bank even cannot fulfill customers' deposits if they request it at once, right? So then we discuss in detail again. There must be you need to obtain the approval from central bank to carry out their businesses, and so that is what the other functions of central bank. And then we have a leasing companies. I'll explain to you, and we have a 3 leasing companies in Sri Lanka, and then so those are also monitored under separate act. Okay, not with the banking act, not with the finance act, and not a separate act. That act is we call Specialized Insurance Leasing Act. Right. Then we also have a primary dealer, and we discuss in detail the issues, some of the issues we faced because of primary dealers. Some people, everybody's talk about the bond issues and blah 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 blah. Huge money was, misuse through the primary dealers, and that's also well aware. But nothing happened, seemed to be taken. Right. Then that is where we have stopped with. හරි නේද? මෙතන නේද අපි නැත්තේ. Okay? Clear පුතා? Right? We have stopped here, no? හරිද පුතා? Right. So we have stopped, Madhushan?
Yes,
We
sir.
have stopped here, no? Right.
Yes.
Okay. Up to now, you okay? I saw some new people have joined. Are there new people, newcomers again? I've just no, too late. So I have already communicated to you the what we have learned in the very first day. So up to that point, we discuss in detail, right? In fact, now I have summarized all these things within almost 15 to 20 minutes, but I took 4 hours to explain all these things in details, right? In detail, I have taken much more time. Okay. Now let me move from these points onwards, right? I think this is the point I just started proceeding, right, today. Okay, let me now try to explain or not all the markets. I think you aware what is financial market. So let you tell me that what is market. For example, I think in the marketing you may learn core concept of marketing, right? What is the core concept of marketing, right? Some of the you may learn about the marketing, and you may learn core concept of marketing. Core concept of marketing mean product, services, right? And then you have to have a um, products and markets, and then we discuss about you may have a first demand, needs and wants, right? First demand, needs and wants, and then you must, in order to fulfill your need and demand of the financial product and services, you must have a financial product and services, right? Then the moment you buy a financial product, look at the quality and satisfactory and all, and you may decide which product to buy. And then you may purchase or do a transaction with the customer, and you become a customer of a bank. Now, where all these transactions or all these functions are taking place, where the buyers are selling, sellers are making, we call them as a financial, we call them as a market. So likewise, we have a financial market. So financial market means all the financial requirement of customers, and all the financial requirements are supplied by the supplier or meeting points. We call the financial market, right? We call the financial market. So it is a marketplace where all these trading of securities, where it took place in share market and in the stock market or lending market. Then we have a forex market, derivative market. There are a lot of financial market in Sri Lanka, right? So sometimes the market will considered as the money market and capital market. So what is the difference between money market and capital market? Can anybody tell me what is the difference between money market and capital market? Can anyone tell me? Right? Now the money market is usually if you are doing businesses for if you buy purchases or services for less than 1 year, we call the money market, right? And if you do dealing with the suppliers or providers of financial offers or financial product and services for a longer time, more than 1 year, we call them as a capital market, right? So what are the instruments available in the money market? Usually you call them as treasury bills, commercial paper. We are going to touch very briefly all these, what is treasury bill, what is commercial paper, certificate of deposit, very briefly, right? But not in detail. So that's the instruments we're dealing with in the money market operations. Then we have a capital market. That means you do business more than 1 year. Right now, say for an example, even for more than fixed deposits, but fixed deposit also you cannot consider because you can withdraw the money at any given time. But for example, stock market, treasury bond, any debt securities issues by the institutions. This one has gone. Okay, so then what happened? The right capital market. Usually you are dealing with the long-term products, right? Then you may have another what you call debt market and equity market and stock market, and certain companies are issuing debentures, bonds, and private purpose for it's a long-term loan. Then we have a primary market, also the secondary market. So what do you mean by a primary market? Now, say example for primary market, I told you the central bank is carrying out an agency function. Right now, central bank, I explained to you, carried out agency function. Now, what is agency functions mean? Behalf of a Sri Lankan government, central bank try to issue some instrument and collect money and give it to the government, right? So that is what you call the agency functions carried out by the central bank. Now, from whom? From when the central bank issuing the treasury bills and bond, nobody can purchase. Between me and you can't go to the central bank and purchase those treasury bills and bonds, right? Because that's a primary market. So the primary market, treasury bills and bonds can only be purchased by who? Primary dealers. Right? Only primary dealers can purchase treasury bills and bonds from central bank, right? And that sort of a market we call primary market, right? Now, who's going to buy the treasury bills and bonds? We can buy through commercial banks or through the primary dealers. So that market we call a secondary market. I think now you know the difference between primary market and secondary market, right? A lot of people are talking, right? A country to develop in financial business, right? The country must have a very efficient, very effective secondary market, right? So you need to understand that, right? Right? Okay. So now I think you know what is meant by primary market and secondary market. Clear? up to now about the financial market, and also we may have what you call the foreign exchange market also, where the foreign exchange these days. I think you may aware that we have a what we have a issue in pertaining to foreign exchange market. No, so we have a lack of dollars, because usually if the banks not have enough foreign currencies, from where they buy the foreign currencies, right? Or otherwise, one way is the proceedings of collection. Now, if the money is come to Sri Lanka through remittances and money through exports and things, and money is dollars is come to Sri Lanka, right? And then the banks need foreign currencies to what? For open LCs, as well as I think most of you are involving, and then they want to send money for education purposes, are usually sent by the government. So now, because of the in the foreign exchange market, the demand and supply is very much. So more demand, less supply. Then what happened? The according to the economy, what is the pricing theory for that? The more the demand, the less supply. What is going up? The price is going up. Now, in this case, what is the price? Is exchange rate, right? The exchange rate is going down. So if you don't have adequate foreign currencies, what happened? Central bank has problem, and then also banks having a problem, because if the bank have a shortage of foreign currency, they need to borrow from the central bank. If the central bank also have restriction, so now of course we have enough problem. So then we have alternative markets, that is we call the black market. So dollar is now, what is the dollar rate now? Mayura, what is the dollar rate? Gayatri, what is the dollar rate in the secondary market, or mean the alternative market? That means the black market. Huh? Akshan, how much you think? What is the market today? What is the dollar rate? Banks, of course, there's something.
230.
Right? How much?
200.
Yeah, I think it is more than now. No, I think 260 level now with the black market. Right. Okay. So that is the market if you're dealing with foreign currency market. So we call them as foreign exchange market. I think now you may aware about basically what are the type of markets. What is markets? Markets mean puta where the buyers or sellers are meeting. Right? Who are the buyers? Who need foreign currencies? Right? Who are the supplier? Maybe the commercial banks, central bank, and other money exchange places, so money lenders, so certain set of people, right? So now, if these two people are meeting, we call the financial market, right? And then we discuss what is primary market, right? I think you are well aware about what is primary market now. Huh? Clear? Sure, no? So you are well aware about, right. So you are well aware about primary market. First, the immediate, if you purchase from someone, we call it the primary market. And if you have a sell products and services from the primary market to the secondary group, we call them as a secondary market, right? Okay, so then we discuss what is primary and secondary market. And I also told you, any country economically efficient. What do you mean by that? That means the financial markets have a very good secondary market. In Sri Lanka, secondary market is not so good in that case, right? Okay, then we have what you call the debt market, where these debt instrument can be marketed through even through the stock market, or also by individual organization. And then we discuss money market and capital market. Money market instruments are short term, capital market are long term, right? I think you can have an idea about financial systems. Okay, I think you have a clear idea now about the financial market. How is it? Right. What is the banking market? I told you what sort of a market in bankings are operating. We call them as only a few players are basically control the market, and then there are other players in the market, and we call them as what? We call them as basically a monopolistic market, right? And we discussing that in detail, the monopolistic market. Okay, clear? While in Sri Lanka, there are some large 576 banks, and there are so many banks. Okay, I now remember something from you. Now I told you most of you are from Pan Asia, no? Harida, is correct. Most of you are Pan Asia. I told you to check whether your asset base. I told you to check the Pan Asia Bank. What is your asset base? Right. Can anyone found that? Kesha, you're from who is the Pan Asia people? I can't remember now. Nimal, you're from Pan Asia. Nimal, you're from Pan Asia. Malidu? Sorry.
Yes, sir.
Madhushan? Right. What is the asset base? Have you found out? I can remember I
Yes,
asked
sir.
from you, no? Just to check.
176 billion, sir.
All right. Fortunately, you're all right, exactly correct. You're all your matters was I mean your account statement published on Tuesday or Wednesday, no? In your newspapers, your accounts were published. Third quarter accounts were published this last week, Tuesday or Thursday, Wednesday or somewhere, right? So people who have not got, yeah, exactly. So then, which category your bank is falling to in that case? We discussed there are three grades now in the banks can be classified. One is a large, medium, and small, right? What is the category of your bank then, Madhushan? Now we say above 500. Now we call them as we call them as a large, between 200 to 500. We call them as a medium banks category, and the banks who are less than 200 million, we call them as small bank. So therefore, according to the central bank classifications, your banks goes under what category? The small bank category, right? So there are around, I told you, around 17 or 18 banks, 19 or banks covered under the small bank. So that is why we have a few large players and more low small players. We call banking system in Sri Lanka enjoying a monopolistic market situation, right? So you need to know all these things because since you are working on that. Okay, having now coming back again to our market, I think now you have a fairly understand about what is the markets and all, right? And then we move into another important area. We may discuss now what you call the financial infrastructure, right? Now, financial infrastructure. So that's also an important thing, important element in the financial system. So what is financial infrastructure? Now, you may note it now with these financial infrastructure, what are the areas comes under that purview. Now, if you look at it, the first one, because it is a payment. Of course, I think you're well aware. Payments are basically foundational pillar of an economy. So that you need to understand, because all economy activity will be represented by some sort of a payment. That, of course, you are aware, right? So that is why payment and settlement system play an important role in any organization, right? It is an important role need to be played by in an economy. So that is what you call payment and settlement system. Right. Now, let me try to explain a little bit of financial uh, payment and settlement systems in an economy. So, what the payments range from micro value payments to large value payments. I think most of you are working in a bank, so therefore you know what is payments and settlement system. And we have a lot of digital payments methods. And if you want to settle through your money or settlement through, you need to use certain settlement prevailing systems. Even for I think most of you are working for a credit card company, credit card divisions in the Pan Asia, so you know what sort of payment methods and how it is important. Right now, let me explain now a little bit of financial infrastructure. Now, you see, financial infrastructure usually is consist of some components. Now, check clearing systems, equity trading systems, debt trading systems, central security depository systems, STPLS or STPLS securities settlement system, fund transfer systems, real-time gross settlement systems. These are financial infrastructure components, right? Now, through the payments and settlement of infrastructure, what we are trying to do, we are trying to transfer of money, right, from accounts of financial institution or between institutions and individuals um, and the institution, right? Okay, so that's the payment system. Now I discuss with you role of payments and settlement system for an economy. In a way, like economy to function smoothly, you must have a good payment and settlement systems in the country, right? That is why we have a rules and regulation issued by central bank have to have a proper payments and settlement system. So we discussed earlier also, remember. Now, I think I discussed last week. Now, what actions the central bank has taken to strengthen this role of payments and settlement system. So one thing they brought new rules that the payments and settlement system act, right? And they will enforce what banks as well as the customers to adhering to, as well as they introduce new payment settlements methods, right? So fintech companies we explain in detail. They started lot of um, uh, initiatives pertaining to the payments settlement system, and we discuss about the some what you call the machine learnings and uh, open bankings, right? So all things we discuss in like artificial intelligence, right? And we discussing those things in detail last week, right? Now, having understood this little bit of the role of payments and settlement system in an economy, now, let me try to explain to you the overview of the Sri Lankan's payment systems. And before that, right before this, I want to tell you why regulation now issuing a check without having the money in your account. We discussed last time. It is an what offense? It's a criminal offense. You is criminal offense mean මරණයක් කරාම දෙන දඩුවමක් තියෙනවානේ මරණීය දණ්ඩනය මැරීම හෝ මැරීමට තැත් කිරීම අපි කියනවා මරණීය දඩුවමක් දිය හැකි වරදක් කියලා, right? That is what we call criminal issue. So therefore, issuing a check without having an account in your persons who issuing a check also considers to be as a criminal offense, right? What do you mean by that? Because then, it really impacted the payment system. So Sri Lanka, we didn't have earlier such thing, right? So recently only, I can't remember the exact year, maybe around 2000 odds only, the central bank was introduced uh, that concept. Issuing a check without having the money in your account is a criminal offense. Before that, it is not a criminal offense. Punishment is not much. Now, why? Because as a result of that, people just issue checks absolutely just to satisfy uh, the supplier or whoever, and we issue checks, right? Now, even though this check returns, there's nothing much take action taken against that issuer. So therefore, as a result of what? People lost the trust and confidence of the payment systems or the checks, right? So we have that issue now. So that is why, in order to prevent and in order to strengthen the people's trust and confidence, so the central bank came up with new laws. Okay, now we move into the Sri Lankan payment systems um, in Sri Lanka. So we have two type of payment system. One is retail payment system. Other one is large value payment system, right? Now, the large value payment system, we usually call them as a real-time cross settlements. We call RTGS. But we have the retail payment systems. We may have seven methods. One is, as we all aware, check image and truncation system, that is CITS. If the checks come to your bank, how long it will take to clear your checks, which comes under the retail payment system. Then we have a card-based payment systems, right? In your organization, a lot of people are working in the card sector. So what is the card-based payment system? And also we have a Sri Lanka interbank payment system that slips. What is that slips? And also we are going to discuss little later on. Then we have today is the mobile banking retail payment system, and then also we have an internet banking system, and we have e-money schemes, common electronic fund transfers. We call the SEPs. So these are we call the retail payment system. So what I'm going to do now, let me try to explain a little bit of these retail payment systems and large payment systems. Because as I explained to you, remember a country's economy to doing well, to be an efficient financial market, like other factors, and payments play also an important role. We may have a smooth payment system, right? So what is a payment system, right? So payment systems is basically, we call them as, what is it consist of? It consists of instruments, payment instruments, right? Like credit card, debit card, stored card, right? Or checks or instruments, right? Payment instrument. But they may have a procedure. So how to deal with these transactions. And also we may have a rules and regulation, right? Now, those things are there for what? To transfer funds between among participants of the payment system and entity operating the management. That is the definition given by Bank of International Settlements. That is the world institution with respect to payment, right? So what is it? It consists of instrument and procedures and right. Dr. Rani Chayamaha also explained in Sri Lanka in 2015 what is payment system. She said include payment instruments, payment infrastructure, that is clearing and settle mechanism, and other ancillary services, right? Under regulatory framework. So payment systems is, I think you have an idea about right? In Sri Lanka, right? So remember, when discussing payment systems, the focus is we are largely on interbank payment system, where customers of two different banks want to transfer fund between using non or electronic or check payment methods. We are focusing on what is but any of you know what is a payment system, right? Now, first we look at it. What is this? What is a payment instrument? What is a payment instrument? Now, payment instrument is an instrument enabling the holder or user to transfer funds. So that's again the Bank of International Settlement definitions about the payment instrument. Any instrument enabling users to transfer funds we call a financial payment instrument, right? But in addition to cash, right? That of course the cash is the number one, mind you. Cash is the number one method, secured methods, no problem. But we have some non-cash payment instrument, right? The issuance and acceptance and using of any payment instrument is regulated, right? So non-cash payments are facilitated through large value payment systems and retail payment systems in Sri Lanka. You can make use of the non-cash payment methods to settle or deal with large value as well as the small value. Right, let me look at it now. What are those non-cash payment instruments available in Sri Lanka? What are the non-cash payment? As you are well aware about that, and the number one is checks. Then some postal instrument, even though we are not using now, these postal draft money orders and things like that, but those are now basically dying, no? Those are dying product. But one time, those are the important instrument, because since we don't have any electronic format, if you need to send money to another party, we go to the post office, get the money order, and send the money order to the required person. Those are we call postal instrument, right? Postal department, and they also carried out a lot of money transfers activities. Of course, in that case, they are the pioneer in this business. Unfortunately, but after developments of IT, and those products are now become more inactive, and nobody is going to do their transactions through the postal sector, right? Then we have a payment cards, right? I think it is of course you are well aware about these methods of payment cards and things like that in Sri Lanka. Those are very much available: credit cards, debit cards, stored value cards, right? And also you may have mobile phone based payment mechanism. Now, if you say mobile payment based mechanism is what are the mobile payments methods available? There are two types of mobile phone methods available. One is we call them as the custom account based mobile payments and mobile phone based e-money systems, right? There are two types of mobile based payment, and one is we call them as the we call them as the right custom account based mobile payments and mobile phone based e-money system. We are going to touch those things little later on. And also we may have an internet based payment system, and now we have a very all the banks are introducing QR code based payment, right? Okay, let me now try to explain a little bit of all these things, right? Okay, first we'll take the slips method, right? So what is slips method? So what is SLIPS called? I think you know Sri Lanka Interbank Payment System is an online interbank electronic fund transfer system catering mainly for low value payments, right? We call SLIPS. So up to rupees 5 million, right? You can't send more than that through the SLIP system. So that was introduced into Sri Lanka in 1994. Now, what is the maximum value? We call them as the 5 million, less than 5 million, right? So these are electronic fund transfer, and it is moved from account to another account without corresponding piece of paper to authorize or approve the transfer of had occurred, and some not they recorded. So now the SLIP system we are heavily used by organizations or companies to send their salaries to the customer's account. Now, these monies are credited to customer's account usually within the 1 day, or usually earlier it takes some time. Now usually within the 1 day it will credited to the customer's account, right? Usually suppose for example SLIP systems are usually mainly in the pension schemes, and the other one is for salaries, right? So the bulk number the company will prepare one check, maybe put all the customers accounts, and then send it to the particular bank, and that bank will credit the accounts on the same day, right? Not online real time. What is the maximum value is 5 million. But then we may have another systems we call the RTGS system, is what you call sending money electronically through use of computer and to settlement again, and which was introduced in 2003. Right, first of course the SIP systems was introduced, right? Then later only the RTGS is introduced, and here it processes and effect financial transaction is you can send in the bulk quantity is the more than 5 million, right? 5 million, more than 5 million you can send it, right? Now what is the charge now, the SLIPs? How much you charge from a customer to send money through the SLIP system? Any students can tell me how much we charge for SLIP system? Maximum how much you can charge through the SLIP system? Can anyone tell me what is the maximum amount you can charge from the SLIP system? Come on. Huh? How much? I think most of you are well aware of all these things. How much you can charge from the system from the customer? Maximum? Induli, how much you can charge? Come on. Huh? How much you can charge from the customer? Induli will have an idea. Kesha, how much you charge from the customer to send your money through the SLIP system? Come on. Mayura?
50?
Madhushan, how much?
50 rupees?
Yeah, go ahead. Huh? How much, Madhushan?
50 rupees?
How much you? Huh?
50 rupees?
50. Right. Now, okay. That's, I think, 50 or 40. I can't remember exactly, right? Okay. So then RTGS, how much? Earlier, RTGS, they charge around up to 1,000 rupees, right? Now, according to the recent circular issued by the central bank, you can charge maximum of 400 rupees, right? 400 rupees. But earlier, they charged 1,000 rupees. Now, you are charging for only up to maximum of 400 rupees, right? I think you may aware all these charges, right? Okay, so that is RTGS. Then we have a CEFTS, right? Common Electronic Fund Transfer System, and that is the recent one introduced by the central bank in 2015. So how you differ from SLIPS and SEPT? Now SEPT is the moment you send through the electronic form, the customer's account credited immediately. So that is why the difference between SEPs, right? SEPs also supporting online real-time fund transfer payments, but that also limited into 5 million, right? Now remember the important thing from the SEPs and the SLIPs. Now SLIPs, they may credited to account maybe during the day, whereas the SEPT, right, once you send from one person to another person, so that other person account will be what? Credited immediately, real-time online basis, like SEPT, right? Okay, so SEPT is like that. That's a difference between these two. Now, when we have another method we call the Just Pay, that is what the Sri Lanka Central Bank of introduced. Now, what is the initial Just Pay used by Sri Lankan Central Bank just to facilitate the small amount of money. I mean, so the slips are usually and SEPT also a little bulk amount. So in order to facilitate the second, and the central bank introduced the what you call the slip system. Sorry, Just Pay. Now in this slide, something is wrong. Just Pay is the latest initiative of Lanka Clear. Now the Lanka Clear is the party we discussed represent the Central Bank of Sri Lanka to involving with all these payment and settlements name, right? So that's a brand name, Lanka Clear. Lanka Pay is the brand name. The Lanka Clear is the company, is also associated with central bank, with some banks funding, and they basically involving in payments methods in Sri Lanka. So that is Lanka Clear under the brand name of Lanka Pay, right? Okay, Just Pay is the therefore latest initiative of Sri Lanka, Lanka Clear, a concept endorsed by the central bank and several banks. Now almost all banks are doing, and finance companies as well, to facilitate secure real-time retail payments below rupees 10,000 under extremely low tariff scheme. Now, if you really go through this, if I ask from you whether this statement with respect to Just Pay is correct or wrong, the statement I mentioned here with regard to Just Pay, I'm asking from you, Buddha, whether this statement correct or wrong. Indunil, what do you think? Is this statement is wrong or correct? Lakshan, whether this statement is wrong or correct? Priya, whether this statement correct or wrong with respect to Just Pay? Come on. Niranji, you are there? Niranji, no others. Niranji or Niranji? Niranji, you are there?
Yes, sir.
Yeah, whether this statement is wrong or correct, Niranji. Right, we'll go for Nimal. Whether this statement is wrong or correct. No idea. Mayura? Come on. I need feedback from you. Madhushan only person will answer. Madhushan, whether this statement correct or wrong with respect to Just Pay. Harida Verdi. Simple. No idea. Madhushan? ඕවනේ හරි අමාරුයි ඔයගොල්ලෝ වචනයක් ගන්න. ඉබ්බකින් පියාටු ගන්න පුළුවන් මට මීට වැඩිය ලීසි. මදුෂාන් ඉන්නවද සීන් එකේ?
Yes, sir. I think that payment 50,000 right now.
ඉතින් ඕක කියන්න පරක්කුනේ ඕකෝ. Right, so you need to deduct that. ඒක කට් කරලා ඒක කරන්න 50,000 කරගන්න. Right, good. It's now 50,000. ඉතින් දන්නවනේ. එක්කෝ දන්නේ වගේ ඉන්නවද? නැත්තම් කම්මැලිද උත්තර ලියන්න. Right. Right. Okay. Then Indunil Kesha. Okay. Right. Now we moving back again to the topic what we have discussing. So you have to deduct, delete 10,000. Now just pay. You can send up to value of 50,000, right? Not 10,000. Now they have increased to 50,000. Good. Right. Now then we may have a common ATM switch. Now common ATM switch is an interbank ATM network. Now you know this, if you go to any other bank ATM machines, you can withdraw the money, but you have to pay little higher charges, right? What is the maximum charge again? If you are using other people ATM machine to withdraw your money, other than now say you are from a Sampath bank, so you are go to another bank's ATM machine, still you can withdraw. Why? Because there are third party, that is the Lanka Clear launch. This one is 2013 under the brand name of Lanka Pay. So anybody can withdraw money from any ATMs, right? Earlier what happened at the time of initiating before 2013, so only few banks, most of them are individually, you cannot take the money from other party, but other banks ATMs. But there are some time early also only 2-3 banks joined together like that. They are individual arrangement. But after the launch of Lanka Pay, so common ATM switch, anybody you can get the money from any ATMs. But if you take it from for your own ATM machine, they will charge you 5 rupees. But if you charge from any other ATM, you need to pay 30 rupees, right? So you have to pay little higher because there is some transaction cost involving on that, right? Now central bank also now not permitted to open ATMs or what you call machines as you like. You can install ATM machines, or what you call today recycling machines, or whatever, CDM machines, or whatever you call it, right? You can install it your branch premises, that. But if you are going to install in separate strategic locations where it is not connected to your branch, right? So you need to obtain the permission from Central Bank of Sri Lanka, right? Now to establish, to open a new branch in Sri Lanka by your own bank. Suppose you are from Pan Asia, so if you want to open new branch, for that even you need to get an obtain from the license from approval from Central Bank, right? That's you need. You can't just open branches. No, you can't open branches as well as you can't close the branches. For that, both cases you need to get an approval from Central Bank. Now, likewise, if you're going to establish a new plant or new ATM machine, cycle machine, or CDM machine in a strategic location other than your normal branch premises, so you need to obtain the approval from Central Bank. Now, why central banks are now telling? They are telling, so since, right, they may look at it when you're asking for the approval, they're asking, okay, what are the other ATM machines along with that? Now you don't want to have a 5, 6, 7 machines together. No, why? Because you can take the money from any of these ATM machines, right? So you don't want to have it. So having a 3-4 ATM switches is not necessary now, right? One way is central bank also getting some money having one. Why? Because if you are going through your own account, so therefore only you need to pay 5 rupees. But if you're going through other merchants ATM machines, right, and you need to pay 30. From that 30, some point going to the central bank as well. So that may be the reason why they don't want to have ATM machines in everywhere, right? Then when we have a QR code payment system, now QR code payment I think is a contactless payment method where a payment is performed by scanning a QR code from a mobile apps, and then it will be fund transfer at points of sale using a payment terminals, right? So now here what happened, why the QR code? So this avoid a lot of infrastructure traditionally associated with electronic payment, right? Such as payment cards, right? And you need to have a POS machines, and all, of course, now are not necessary with the QR code, right? So that is why a lot of people are now going for a QR code payments method. So, and that is, it is an alternative to doing electronic fund transfer at the point of sale using a payment terminal. So you don't want to have a payment terminal. Through use of QR code, you can send the money, right? So a lot of banks are now initiated this payments method. Then we have a shared ATM switch, we call SAS. So now organizations like, now some people has to spend, some banks need to spend a lot of money for ATMs, right, to establish their own ATM system. So therefore the central bank facilitate the banks, right? Lanka Pay also facilitate some hosted ATM switch. Behalf of them, they do the needful. Now, example in regional development bank, they also have the ATM cards, but and that of course you are using the Lanka Pay payment SS system. So that is what you call the shared ATM switch methods, right? So two companies like Sarvodaya Development Finance and the regional bank development bank is using a shared ATM switch. It's not a common ATM switch, no. It is a shared ATM switch, because since they don't have a big money to have their own ATM network, so they help with the regional development bank. So then I explained to you, we have a mobile money systems. We explained to you in detail. Mobile money is a mobile payment system based on accounts held by a mobile operator and accessible from subscribers' mobile phones. Now, the conversions of cash into electronic value and vice versa happens in the retail store and agents, and all transactions are authorized and recorded in real time using SMSs. Right? There are two types of mobile money in Sri Lanka. One method is customer account based mobile payments. Other method is mobile phone based e-money system. Right? Now, customer account based mobile payment system means customer account based mobile payment system, sometimes we call mobile phone banking, provide the facility to customer of licensed service providers. Now, for that also, a mobile company maybe need to obtain the license from the central bank to access their accounts through their mobile phones. You can go through their mobile phone. They can access to the mobile phone. Then mobile phone based e-money systems mean the mobile phone based e-money system issue a monetary value upon receipt of funds and store electronically for the purpose of using for payment. Now, mobile based e-payment systems are basically we call what the easy cash and things like that is a mobile phone based e-money system. What is the amount, maximum amount you can use in the e-money systems now? Can anyone tell me? Because of the COVID-19, these figures was increased to some extent, right? I think it is now 50,000 rupees. So you know what you mean by the mobile phone-based e-money systems and custom account-based mobile payments, right? There are two types of mobile money in Sri Lanka, right? Custom account-based mobile payments and mobile phone-based e-money systems, right? You can store the money in the mobile phone, right? Then you can transfer the money, right? But other one, you can use the mobile payment systems providers to access the account through the mobile phones, okay, right? Some of the things are very novel thing. And then we may have a Bitcoin also. Now, a lot of people are talking about the Bitcoin, and it is also some sort of a payment method. Was the first cryptocurrency name is Bitcoin. We have a various type of names of Bitcoins, and that was launched in 2009 by a person called Satoshi Nakamoto. So who don't know who is that fellow? And Bitcoin is the largest cryptocurrency measured by market capitalization in the world. Right. Now, if I'll ask from you about a little bit of Bitcoin, what is the value of Bitcoin now? Because now Bitcoin is a sort of a cryptocurrency. Now, what is the value now? Right? Can anybody tell me? Actually, it is sometimes we call it is a cryptocurrency. Simple terms, you say, is a type of digital, or sometimes we call it's a virtual currency, right? Right? We may have, apart from Bitcoin, we may have other things called Ethereum, Litecoin, Ripple, Sterling, Neo, Monero. There are a lot of Bitcoin cryptocurrencies like Bitcoin, right? Now, Bitcoin, the cryptocurrency, Bitcoin is the first cryptocurrency successfully record transactions in some decentralized blockchain band network, right? Actually, it was as issued in 2009. Now, the issue is about the Bitcoin. What is the main issue about the Bitcoin? There are some issues about the Bitcoin, and still Bitcoins are not recognized by countries. Even the Sri Lanka, we have not recognized. And one of the problem is anonymous. That means not required to disclose their identity. That's another important thing in key features in cryptocurrency, right? And also requiring some computer power to create. Now, they said around 21 million Bitcoins were created. Now, in order to create a one Bitcoin, it's consumed a lot of energy, right? A lot of power, and that is why sometimes Bitcoin also polluting the environment. That's the criticisms about the Bitcoin, right? In environment point of view. But another important thing about the Bitcoin is price volatility and uncertainty. Now, if you look at it now, what is the Bitcoin value? Some of you are involving in this. When they started in 2009, it's a very small amount. It's 10 cents, something like that in US dollar. And it has gone up to 2017. It may reach, it reach around 20,000 US dollar for one Bitcoin. And in 2020, right, maybe it has gone to higher level, basically something around 60,000 to 60 to 65,000, and now back again maybe around 30-40,000. That is why there's a huge fluctuations about the Bitcoin, right? So that's one of the disadvantage of Bitcoin. So it's fluctuating. Recently in April 2021, right? It is 63,000, and 2021 January, Bitcoin value, one Bitcoin is US dollars around 9,500. Now within 4 months, right, Bitcoin has gone up to 63,000 per dollar, right? Right. So that means April 20 this year, April. So imagine fluctuation of price. So that's the weakness of Bitcoins as well. Now I think it's 30,000, but still, it's still a good thing. People are talking about hot digital wallet and call digital wallet, but don't worry about all these things, right? And there are some institutions or players in the market um, who are involving in this cryptocurrencies. And then a lot of people are not aware about the um, you know about the cryptocurrencies and all. And also, since this is pure going on electronic form, so there may be a lot of fraudulent can be taken place. So hackers can be enter into the cryptocurrency business, and there's a huge amount recently involving in around what you call in even for stealing of hackers stolen around 1,000 million, right, from a Japan cryptocurrency organizations. And the largest one was reported in Japan again. Japan lost around 540 million to crypto hacks in first early 2018. So likewise, there may be a lot of um, scams and frauds can be taken place through the bitcoins, and also some technological risks you may experience in Bitcoin. So, but Bitcoin's also payment methods. Remember, right? Bitcoin also payment methods. Some countries are accepting the Bitcoin payments, right? Some countries are accepting the Bitcoin payments, but is not in Sri Lanka. So that's another things. You may read a lot of things about the Bitcoins. Or Bitcoin is some sort of a coin, right? But is then cryptocurrency. There are a lot of other cryptocurrencies like Bitcoin, as I explained, Ethereum, and all these things. But you need to know there is some cryptocurrencies available in the market, right? And then we may also have what you call Lanka Pay online payment platform. We call LPOPP. So that was launched in 2017, again under the directions of Central Bank. And this online payment platform, remember, facilitate bank customers to make online payments to organizations, right? So that are connected to Lanka Pay online payment platform, and there you use the SEFT method usually, transferring money directly from their account or savings account to the respective organization's account. So that means, say if you want to settle now organizations like for your income tax, your personal income tax you want to pay, you can pay to the income tax department. And then otherwise, if you are dealing with certain payments to the customs, right, that also you can send the money through Lanka payment using the Lanka payment online payments platform, LPOPP. So methods to send some organizations, and even certain so good thing, even certain what you call the license, revenue license, as well as the regional Pradeshiya Sabha also having this facility. And Central Bank also recently introduced some platform, some remit NO something, to send the money from abroad to the using this platform. So now that was introduced in 2017, the Lanka Pay online payment platform. Clear? I think if you want to send the money direct to the certain organizations like customs, like Inland Revenue, some Pradeshiya Sabha, even from some vehicle registrations and organization. You can send the money using Lanka Pay online payment platform. The platform is used by usually the SEFT. That means SEFT means you can immediately credit it to that account through the methodology is the SEFT system, right? Okay. So now, so we have Roach developed. Then you may have also we call common POS switch. Now we have a common ATM switch now. That means any ATMs in Sri Lanka, right? Anybody can go to any of these ATM switch, right? And withdraw the money irrespective of your bank, right? Because that facility was given. Now, what happened the POS switch today? Now, common POS switch mean, so now you may go to the supermarket, even before you go for the, go to the certain boutiques or something, you may see a lot of POS terminal there, no? One from Sampath, one from HNB, one from Bank of Ceylon, like that. You may have a lot of switch POS terminals there. But with the development of these common POS switch, like ATM, you want to have a one POS machine, right? So if you're using anybody's card, and you can get the you don't want to have a more switches, right? So CPS link all POS switches of Lanka Pay CPS members to facilitate payment card transactional or renegotiated from any POS terminal of Lanka Pay CPS members in a unified infrastructure we call CPS, right? Now the main functions of Lanka Pay CPS, that is common POS switch, is switching and clearing of not on a POS transaction. So between Lanka Pay acquirers and issues, now currently Lanka Pay, there's some Lanka Pay, Japanese co-bank, co-badge debit cards also introduced. POS transactions are routed through Lanka Pay, CPS and Lanka Pay, right? So we enter into a foreign banks to do the transaction. Now in future, I mean, we don't want to have a much POS terminal. You can use one POS switch to deal with common platform, right? Oh, okay, right. Then clear now. Up to now, we just come to end of the payment methods, right? Okay, clear now. We are going to just discuss a little bit of payments methods prevailing in Sri Lanka, and a lot of banks are using. Okay, Kesha, have you understood? Harida Kesha? මට ඉතින් හැමතිස්සෙම ඔයගොල්ලෝගේ feedback එක බලන්න ඕනේ. හරිද Kesha? ඉන්නවද Kesha? Very difficult to get your voice නේද? Kesha is a boy or a girl? Kesha. Right, okay. Right, thank you. At least you send me a message to chat. Okay, Lakshan, හරිද?
Yes, sir. Understood. Yeah.
Right, okay. Now you know there are different type of payments methods, and we discuss about even for cryptocurrency where it is not in Sri Lanka, but this is taking place in the market, right? In the financial market as a payments method. Okay, thank you. I need some sort of a response, Puta, right? Otherwise, I don't know. Ria, you are listening to me? Ria James. Listen, Ria, you are from Sri Lanka, or?
Yes.
Yeah.
Yes.
Sorry, Ria. Which bank you are? I thought you were a boy, right? Okay.
DSCC.
Right. Okay. So different name. That's what. Okay, Ria. Right.
That is Tusharia actually.
Huh?
That is Tusharia.
Tusharia. Oh my goodness. So why you are left?
That is in the Google name.
Right. Okay. Sorry. Okay. Thank you, Tushar. Right. So now we're moving to the next area. Up to now, you're okay, everybody? Right? Clear? Right. So now we move into another important area, right? And it is what you call the safety nets. Now, financial safety nets is resolution and protection framework to ensure stakeholders in the financial system, right? So we need to protect our stakeholders as well, right? Resolutions and protection framework to ensure stakeholders in the financial system, right? Financial system safety nets provide underlying framework for financial system stability, right? In different ways, right? What are these important thing is effective bank regulations and supervision. Yes, that is why we have a very strong bank rules and regulation to protect our stakeholders, right? Okay, we have a very good bank regulation system established in the by the central bank. And we have another important thing is emergency financial facility. So suppose the particular bank face some sort of a financial problem, right? So from where are they going to collect some money, right? They may go to the interbank borrowing, right? So DFCC can go to the Bank of Ceylon or any other banks and ask for the short-term borrowing requirement. You can fulfill, right? Usually they won't go to the Bank of Ceylon, go to the central bank, right? Right? If we usually, if you have some liquidity problem, right, it's some financial requirement. Other banks, like us, we also have some financial requirement. We'll go to the who? One of my good friends, right? Okay, try to borrow money from my friends. Oh, maybe, right? So borrow from my friends. So somebody, if I need financial requirement, that's my immediately approach. Then if you don't have the money, so you will go to the last resort. How the antimatean, to whom you are going to borrow money? Lender or lender of last resort. If you can't collect some money, where we are going? That is my final destination. Kagawata then DFCC or then we'll say, for example, Pan Asia. Finally, you go to whom? To borrow some money. You are going for a who? You are usually going to the central bank, no? Yeah, that is why we call lender at last resort. But you go, what is the rate they charge from you if you ask for the money from central bank? What is the rate they will say? How you call that rate? What is the charge or what is the rate you call? It's called the bank rate. What is that? Bank rate. Bank rate little more higher, but of course you need to provide some security if you want to go for borrowing the money from the central bank. Not only that, then if you're going to borrow money from central bank, they said, why you are asking money? So central bank as a regulator, so if we're continuously going to borrow money from central bank, they come behind you. Why? They think that means your liquidity is not properly managed. Because that give you a chance to your organization is going to be a bankrupt. Right? Because ultimately burden comes to whom? The central bank. Right? If one institution collapses, whatever, burden comes to you all, no mean, right? Why? Why burdens come to you all? Because what happened? Then all the other banks or other financial institutions are going to impact from that. So therefore, central bank is little bit of worry. They come and supervise you all then. Most oftenly and quickly they move into a why they're going to look at it because yeah, a central bank has all the power, no, right? They can come to your bank and do some investigation. So therefore, lot of people not immediately go to the central bank find for money, but they try to borrow money from what? From the interbank. Failing in which only you're going to that. So that is what you call, we may have a financial system, right? So because the financial system, we may have some, if we want to maintain the financial system stability, you need some money in face the liquidity problem. That also provided by the central bank to some extent, or otherwise you can go to the other financial institution and borrow money. Now the same thing, suppose if you have a problem. Now recently you may be heard about this story. So there are two organizations banned, cancel their license, no, but the central bank, their finance, then the um, ETI and the Swarnama. Now the governor has appointed a committee to relook at it, whether they can start the business. Now these things are doing a good way as well as the bad way, right? So to relook at it. Now relook at it of beginning the operation mean what? Relook at it the beginning the operation mean, right? They need find some sponsor or some capital provider, right? Some capital provision. If somebody can put the money, right, they can start the business. Now in another Union Bank also, I don't want to mention that. Okay, it doesn't matter. The Union Bank also had some capital issue, capital requirement, right? But usually, according to the central bank, there is some restriction. The foreign party cannot invest in banks more than 10% or something, right? Okay, right, for their capital. But the central bank given special permission for Union Bank to find some sources of foreign sources to improve their capital base. Now that there, of course, central bank has given some, I can't remember the name, one American rich company to invest the money in Union Bank. Around 75% of the capital invested by the foreign party USA. Right, that is how Union Bank, fulfill the capital requirement. But it's normally under circumstances, a central bank is not allowing. But if you organizations want to improve your capital to run the bank smoothly, the central bank can give a special permission to do that. Now, likewise, whether they are now relook at it, whether they can increase, start the ATI and Swarnamal, but it is under some sort of a under some sort of a feasibility study way, right? Okay, so these are the methods available um, for financial safety net. What are these? Right. So what are the safety mechanism used by central bank basically in order to have the financial system stability? One is effective bank regulation, and then the deposit insurance scheme, emergency financial facility, and effective crisis resolution policies. But one thing is I am not discussing detail with you. Now, CBSL introduced a deposit insurance scheme. Now, now we call not deposit insurance scheme. Now, presently we call them as Sri Lanka Deposit Insurance and Liquidity Support Scheme. Right. Okay. Now, I'm just going to discuss a little bit of this, right? So, I'm going to discuss about the little bit of safety net, which I may going to continue in another day as in detail, but for your purpose, understanding purposes. Okay. Now I'll ask you, Chamod, right? How much, suppose your central bank took a decision to cancel or suspended your business license to commence business operation, depositors who deposit money with your particular organization that took decisions to cancel the license, how much of money a customer can take as a deposit under deposit liquidity support scheme? Chamod, how much? දැන් අපි හිතමු සල්ලි දානවා ඔයගොල්ලන්ගේ බැංකුවක හරි එහෙම නැත්නම් ෆයිනෑන්ස් කම්පැනි රයිට් දාලා තියෙනකොට සෙන්ට්‍රල් බැංක් එක කොහොම හරි මේ ෆිනෑන්ස් ඉන්ස්ටිටියුෂන් එක හරි මේ බැංක් එක වහන්න තීරණය කරනවා. කස්ටමර් කෙනෙකුට හම්බෙන්න පුළුවන් උපරිම කම්පෙන්සේෂන් එක කීයද? මන්දි මුදල කීයද?
1.1 million.
Ranjit?
1.1 million. 1 million.
1 million. Very good, very good. So that was earlier how much? Earlier how much, Niraji? It is 600,000, no? From this year, March only, that was increased to 1.1 million, right? So we can talk a lot on that, right? From where they are giving this money? From which fund the money is given by the central bank? Mohad, how you call that fund? That fund, what you call deposit insurance liquidity support fund. Now, how this fund is getting money, or how money is come to this fund? From where? The fund එකක් වලම සල්ලි එන්න එපානේ නේද? කොහෙන්ද මේක සල්ලි එන්නේ? Now, all the licensed banks and licensed finance companies in Sri Lanka need to pay, it's an insurance scheme, pay what? Premium to this fund. It's a mandatory. It's a mandatory. Now, how you decide how much you need to pay as a premium? මේ ෆන්ඩ් එකට එහෙමනම් මේ ෆිනෑන්ෂල් ඉන්ස්ටිටියුෂන් උයි මේ බැංකුයි සල්ලි එපයි මේ ෆන්ඩ් එක ක්‍රියේට් කරන්න ඕ ඩෙවලොප් කරන්න. නැත්නම් ඉස්සර තිබුණේ 600,000 දැන් 1.1 මිලියන් දෙන්න මේ ෆන්ඩ් එකේට සල්ලි එකතු වෙන්න එපානේ. දැන් මේ ෆන්ඩ් එක නිකම් roughly බැලුවොත් මේ ෆන්ඩ් එකේ මේ වෙනකොට it's having around close to 60 billion rupees. Huge amount, right? Around 60 billion, right? For an example. Now, this 60 billion start from this fund. When we initiated, they started with around 1.1 billion rupees. පටන් ගන්නකොට 2010 වගේ මේක 2008 9 වගේ මේකට තිබුණේ බිලියන 1යි. Then we put a billion 60ක් තියෙනවා. So that means the fund was increased now. How you get these funds? Funds is coming from participative organization premium, like banks and financial institutions registered. Right. Okay, clear. Now, how much DFCs is paid? How much the bankruptcy loan is paid? How much the commercial bank is paid? How much Pan Asia Bank is paid as a premium? How you calculate? There is a way of calculating, right? Remember that also. There is a way of calculation. What is the method? There are two methods in Sri Lanka we are doing. One method is basically, suppose if you are a bank, if your capital adequacy ratio, you know what is capital adequacy ratio? That is what you call the CAR, right? I think you're going to learn a little bit later on. Is more than 14%. If your capital adequacy ratio of your bank is more than 14%, right? you need to pay 0.1%, 0.1% from your eligible deposit per year to the central bank. That means now, say for an example, your eligible deposits. Now that's another important thing. What is eligible deposits? Now you need to calculate your bank's total deposits. When you are calculating your bank's total deposits, remember certain type of deposits you are not going to take into account. You are not going to take into account. Right now, say for an example, commercial bank. Commercial bank, for an example, usually they are having more than 14% capital adequacy ratio. If that particular bank, if they want to pay premium from deposits to the credited to the insurance deposit scheme in Central Bank of Sri Lanka, how much they have to pay? It's like, now say their total deposit, say for an example, 120 billion, example, 120 billion. They have the total deposit of Central Bank is 120 billion, example. It's more than that, but I'll tell you. Now I told you certain deposits they're not going to take into account. Now let's look at it. What are those element accounts they are not going to take into account? Suppose if the commercial bank have the deposit from other financial institutions, right? Say 5 billion. Then from 120, they have to deduct 5 billion. Suppose some government institutions, right, departments and things like that, they also deposit 5 billion with the central bank, with the commercial bank, take that out also. Now 150, 110, right? And you look at it, your employees' money and the directors' money depositors in the commercial bank, say for an example, also 5 billion. That also take it out. So then how much now? 105 billion. Then you have some sort of a dormant account, abundant property amounts, right? There are some like accounts are just lying and you have given loans against deposits. All these are come to around another 5 billion. Take that out. Then what is now left behind? Only 100 billion. Now, all the deposits in the bank not taken into account. There are some deposits you are moved out from the bank, right? And then and ultimately you get 100 billion. So now how much you're going to pay? 100 billion into how much? What is the percentage? I told you about 14% capital adequacy bank, 0.1%. Now look at it, 0.1%, right? Look at the 0.1%, right? 0.1% of 100 is how much? 10 billion, right? Okay, so that you need to pay as a 0.1 million into 100 mean 1 billion, no? Right? As a deposit insurance premium. But that is for the, you need to pay year now. But deposit insurance, you need to pay by banks quarterly. 100 billion into 0.1% into how much? 3 divided by 12. You need to pay quarterly. So that is the money you need to pay to the central bank as a premium. But you have to pay once you finish the quarter within 15 days, before 15 days. Now you say October, quarter finished now. Now banks need to pay before October 15 to the central bank as a premium. Otherwise what happens? They will charge you a penalty. They will charge you a penalty. LIBOR, don't worry about much of this, right? Okay, that is one. So continuously every 3 months you need to pay that amount. Now think about the banks. You don't have a 14%. Banks who don't have a 14% capital adequacy ratio, they need to pay, instead of 0.1%, they need to pay 0.125% more, 0.125% to from that eligible again, and in quarterly again you need to pay to the central bank. Suppose your bank are not above 14% capital adequacy ratio. Now amount is little high, right? Those are the banks. Suppose you're in a now of course Pan Asia Bank definitely say you need to, even for the DFCC, you need to pay from your total deposits, eligible deposits, right? You need to pay 0.125 into 12, 3 divided by, that's a quarter figure, right? Figure, and you need to pay to the central bank as a premium. Then all the finance companies, they need to pay 0.15%. Tawat 0.25 වැඩි කරලා 0.15% as a premium. Mind you, for bank you need to pay quarterly, but as far as the finance companies, you need to pay premium monthly, not quarterly. So they have a lot of restrictions, right? This is how the premiums is paid by the who? By the central, by the respective organization to central bank, and this is how this fund is accumulated. So that fund is using for people if the particular organization is collapsed, right? This fund is facing to that. Now important thing is here, neither මොකද්ද වෙන්නේ වෙන මොකෙක් හරි කඩා වැටුණත් අපි ගෙවන්න ප්‍රීමියම් එකකින් ගන්න ෆන්ඩ් එකේ උන් සල්ලි ගෙවන්න. ඒක ටික unfair කියලා හිතෙනවා, but that's a fact. Right? Okay, now I think you understood this method, right? So what is the maximum amount you are getting? Now can you see that diagram? So now banks, how much you need to pay? If you're having more than 14% capital adequacy, you're going to pay 1%, right? Less than 14%, right? So bank need to pay 1.25%. All financial institutions, all other finance companies need to pay how much? 0.1%, right? Now this is the amount, and you need to pay this one. You need to pay quarterly. Now say for example our case, say 100 billion, how much? 0.1% into how much they say, right? Quarterly. Now say quarterly. Okay, if you put it like this, what is the amount you need to pay quarterly? 3 into 4, 4 into 25, right? Okay, so then you put here, so 25 divided by 1000, how much of money, billion, you need to pay? 0.25 into 1000, 1 billion, 2.5. So this is the money you need to pay to the central bank quarterly. Remember, quarterly. Right. Now here, like that, you need to pay same amount, depend on your deposit, eligible deposits, right? Okay. Multiplied by your rate here is 1.5. In here, is how much? 12. 12. 12. Monthly basis you need to pay. Right? But here, quarterly. Okay? Right. I think now you understood about the insurance. Clear? Now, remember what is the maximum amount you can take? 1.1 million. Right? Suppose if you have a joint account, about 1.1 million in your account, how much you are getting? Only half of that. Because there are two people. Now the payment method is per customer, per deposits, right? Per customer, per bank. එහෙමනම් හොඳම වැඩේ මොකද්ද? හොඳම වැඩේ මොකද්ද? එහෙමනම් අපිට කරන්න තියෙන්නේ එක බැංකුවක ඔක්කොම සල්ලි දාන්න නැතුව ඉන්න ඕනේ. හැබැයි NSB එකේ දැම්මොත් it's not comes under this scheme. Whatever the money you are getting, but all other banks and finance institutions, the maximum you get it only up to 1.1 million. Say if you deposited 2 million even in a particular one bank, you get only 1.1 million. So therefore, if you want to have more deposits, either you put NSB or maybe you may divide your amounts within your other banks as well. But don't put one because something happened. We hope there won't be happen. But if there is something, so that's the insurance scheme. All right? Okay. So now you noted. Then rather than Niranji and Nimal, you okay? Nimal, no? Nimal or how you pronounce Puta? Nimal das Nimal das or Nimal das. Nimal, how you pronounce your name? Nimal, right? Okay. Malindu okay? Mata Malindu mai tini meki nama වැටෙන්න ඉස්සරහ එන්න. Lakshan okay? Lakshan?
Okay, sir.
Okay.
Right. Okay. Now you know how you collect the insurance, right? ආවද හොඳ අවබෝධයක් insurance ගැන දැන්? හරිද? Clear? Insurance ගැන I think now you got idea about how we are going to pay, how the money is coming. Now recently, we discussed this name was changed now. Earlier deposit insurance scheme. Now they are talking about deposit insurance and liquidity support scheme. Why they have changed the name? Now this deposit insurance fund now bigger and bigger now. Now what central bank is doing? They want to reinvest this money like pension fund, like the EPF is a fund, right? Now central bank make use of this fund for what purposes, right? Now you see if there is a problem faced by a particular finance organization, they want to borrow money from central bank. Central bank borrowing this money to that particular organization, using of this fund and collect some interest also. And with that also, this fund, in addition to the premium, some other interests, penalties, and all this fund is growing. That is why this year we in a position to increase the deposits of certain financial institution as a compensation to 600 to 1.1 million. Right? ඉතින් මේක ඉතින් ලේසියෙන් කඩා වැටෙන්නේ නැහැ නේ ඔය එකක් දෙකක් කඩා වැටුණාට right? එහෙම කඩා වැටෙන්නේ නැහැ. ඉතින් මේක ඉතින් එන්න money grow වෙනවා. Right? Okay, so now if we go into further, remember this fund Sri Lankaවේ තියෙන්නේ ex ante method. ඒ කියන්නේ මොකක් හරි උනාම තමයි කියවන්නේ. නමුත් සමහර රටවල් තියෙනවා then making වෙටින්නේ රටේ finance net එක හම්බෙන්නේ only to the one stakeholder නේ finance මේ customers රටනේ. නමුත් සමහර රටවල් තියෙනවා මේ ෆන්ඩ් එක use කරලා යම්කිසි කඩා වැටෙන ආයතනයකට මුදල් ආධාර දෙන්න පුළුවන් විදියට හදලා තියෙනවා. Right? එතකොට Sri Lanka also may look at it that aspect also. But at the moment that we are doing, we are giving compensation only to the customers. Right? I think now you have understood about basically what is a financial safety net. Right? One thing is the main objective of this insurance scheme, deposit insurance scheme, to protect a small innocent customers, small savers. Right? That is why they are giving maximum of 1.1 trillion million rupees. Right? But whereas, right, and also this sort of insurance schemes, so we are providing the financial system a little bit of more strength, right, and financial stability increase as well as customer confidence level increase by protecting the deposit of the small people, right? So therefore, financial system, right, we discussed the component of the financial system, right? We discussed the component of the financial system. So therefore, financial net also an important element in the financial systems. Right? You are clear now? Right? Okay, so now okay. So we may have a break and we'll continue, or what you want, Puta? Break ya arang start karna, or otherwise we may continue and have a break. What do you think? Tell me immediately. Can break ya karang api karna, right? Will you go for break? Father, break ya karang ya muneder. Sure. Right. What time will we join again then? Another 20 minutes time. Now is, what's the time now? 10:28. So now 20 minutes break. Exactly we'll take 50, 12, now 28. 10:47. 10:47. Okay. So shall we meet on 10:47 again, Puta? We'll have a break. We'll have a 10:47. We'll have it, huh? Okay, Amila. Okay, Amila. Amila, you are there? Amila, Sumutipala, Mr. Amita Sumutipala, you know the. Is calling you again. The mommy thing attendance mark karno again. You know the Chamod. Chamod, you are there? Right. Okay. Mama school gaya again. Right. Isn't it? That is.
Yes, sir.
Right.
Yeah.
Good. Sorry. Yeah. Sometimes I think I know is the girl or boy. Right.
Yeah.
Okay. So you got understood now up to now about the insurance schemes and why it is important as a safety net mechanism to have a better financial system in the country. Now, you noted now what I want to tell you. Those are the financial systems component. Each and every component play an important role. Like our body, now I told you this financial system is like our body, right? Now our body is consist of different organs and parts. Now each and organ in our body play some sort of a role. Of course, there are some parts not important to us. But then most of the appendix gland we don't want, right? But then we may certain organs in our body have perform particular functions. Likewise, now what we are discussing, right? Now, if have some problem with these systems, what happened? There we have some problem. We have some problem. Whether our neuro systems is not working well, our blood circulation is not working well, right? Our digestive systems are not doing well. So we have some problem now. We need to take medicine. If your digestive systems and hormone systems are not working, we have to take some tablets about the about the diabetes. Like that, if you have blood circulation, you may have blocked certain blood vessels. We take some cholesterol or something, right? Likewise, we have our systems are consist of a lot of parts, subsystems. Likewise, the financial systems play an important. Now, all these subsystems play an important role of what smooth functioning of financial system, right? So now I think we have a better understanding about the financial system. So after the break, what we are going to discuss, another important component of a financial system is what you call the financial instrument. So there we discuss about the deposits, loans, treasury bills, bond, commercial paper, debentures, corporate bonds, asset-backed securities, lease and hire purchase, shares, derivatives, things like that. We are going to touch all of this as well as some of the important things only. Why these instruments play an important role, why as a customer need to know all these things, then only we have a financial system. So we have now instruments available. We discuss financial organization, financial institution, right? We discuss the markets, we discuss the payment methods, and those are the components of financial systems. Another component we are going to discuss after the break about these financial instruments, right? To get some idea about the financial system components, right? We'll have a break now. It's go to 10:33. Therefore, I may catch you not as promised at 10:47 or now is 20 minutes exactly. I will now catch you around 10 wait 30 20 minutes 10:51. Okay, let me start with now with the financial instrument, right? Financial financial instrument. Right now, we discuss a financial instrument is basically a monetary contract between parties, right? Between financial institution and customers. We call them as a financial instrument. Once you purchase a fund, you are basically enter into a financial contract, right? Remember, any financial service or instrument, if you purchase me, we call the enter into a financial contract. Now, these are some of the financial traditional financial instruments, but these financial instruments, mind you, basically develop and modify then and there with the development of technology and things like that. Okay, simple. Now, I think we know the deposits, right? The financial instrument deposits. Now, deposits, maybe you know that we may have three types of deposits. The demand deposits, saving deposits, and the fixed or time deposit. That's a normal, very traditional type of deposit. Within this framework, you may have a different type of savings deposits. You may have a different type of fixed time deposits and things like that. Okay. Now we look at it. The another important things when you talk about the demand deposits. These the the difference between demand deposits and saving deposits, and how we differ from time deposits, what are the qualities of demand deposit. Now, if you ask him to compare and contrast these three deposits, what are the type of deposits you are going to discuss, right? Demand, savings, and fixed deposits. Like, what are the difference between these deposits? From the customer's point of view, what are the advantage these deposits to the customer? In the terms of bank's point of view, what are the advantages of these deposits to the bank? Right now, we usually call them as a CASA deposits, right? CASA mean why it is consist of demand deposits and serving deposits. Now, every bank is trying to improve their CASA ratio. Now, the CASA ratio mean basically at the moment banks are having around 30 to 35%, right? That is the rate. So every bank try to improve this CASA ratio. Why we need to improve the CASA ratio? Why it is significant to the bank? Because so if you improve your CASA ratio, that is mean those are the low cost of funds for your banks. What do you mean by the low cost of funds? That means the demand deposits and the savings deposit, usually you are paying less interest, right? So therefore, you can invest these low cost fund with a high yield lending products, right? So therefore, every bank try to improve demand deposits and saving deposits. And there also you need to look at it some important points. What you call today the nomination facility. So that's the important things in as far as the deposits are concerned, except for demand. So you can nominate savings and fixed deposit any other party. So advantage of nominations to both bank as well as the customer. So banks are less headache. Why? So you don't want to, suppose if something happened to a particular customer and you don't want to go for legal litigations, actions and things like that, simply so we deliver whatever the amount lying in your deposit. If you have nominated, the nominated party can take the money after some time the depositor demise, right? So that's an important element as far as the demand deposit and saving deposit. My suggestion is to you, if you are in the counter, without customer may ask or not also, you have to propose to the customer when the customer can come for an opening account for especially the time deposit as well as the saving deposit. So we ask from the customer, are you willing to nominate your deposit, especially if a customer comes little old customers, you can always propose that, right? So sometimes customer may not willing to do that, but then you can convince them. It's good for you as good for the customer, and it is a, remember, and it is a selling point. It is a marketing tool. Now remember also this was earlier only limited to certain banks. Now I think the NSB and some banks only have that facility, and subsequently only this facility was given to all the other banks, right? Earlier only few banks having that facility, but after that this was given to other this facility to other banks. So these are the important type of feature you can incorporate it when it goes to selling your deposits product, right? I think now you have an idea about basically the type of deposits, the financial instruments, what are the type of deposits, and I think you may aware when you have products like that, you need to look at it, some features about this product. Now you know the demand deposits are, example I'm just telling, right? The demand deposits are basically interest free, so therefore because since we are not giving interest, it's a low cost fund, zero cost fund to bank, right? That is why we are trying to improve the demand. And as far as the customer's point of view, as well as the bank point of view, having a demand deposit, so you can offer him OD facilities, and also you can offer them checkbook facilities, and you double earning from this. Now, how you bank double earning from demand deposits? One way, you won't pay any interest. Other benefit is what? Other benefits is you can offer, some overdraft facilities where you can get little higher interest rate. That's the second. Third one, another important benefit, you can get fee-based income also. How you improve your fee-based income? By issuing checkbooks, right? So you can earn some other money, right? Okay, so likewise, demand deposit, therefore, how it benefits to the bank, and you need to also look at it, how it benefits to the customers as well, right? Okay, so I think now you have an idea about what is demand deposits and what is savings deposits and fixed deposits. And remember, issue of deposits is what? Is a liquidity problem. Always these demands, all these savings products, all these deposits are payable on demand by the bank. Payable on demand by the bank, whether irrespective of the fixed deposit, even though customer put the money for 3 years, 4 years, but if tomorrow customer comes and asks the money, you need to pay. Of course, there is some penalty, but you need to pay the capital price, right? So therefore, there are some risk of having deposits, and also remember why the banks are different from other financial institutions, other market institutions, right? What are the main important? Actually, the deposits are free capital, one way, some sort of a capital. So we run the business from the customer's money. So therefore, these financial instruments play an important role. I think now you have a better understand about the deposits, right? How it is important and why we need to concentrate on this, right? Then we move into another type of investment instrument is basically people are talk about that is what you call government bonds, and we call treasury bills and bonds. Now, these are actually, these are we call gilt-edge securities, and it is a default risk is free to customers, right? Because if the investor want to invest in treasury bills and treasury bond, and those are 100% gilt-edge securities. Gilt-edge means zero risk. So it's a government guarantees. Now, these are, as another important thing is, treasury bills and bonds are, these are what you call the products available with the customer. Those are tradable securities, and those are keep always as a security, as a collateral you can make use of. And there are some advantages and disadvantages to bonds. We discussed these treasury bills and bonds issued by the central bank on behalf of the government, and primary dealers are purchasing, and you can buy it from the primary dealers, and there is a under secondary market, right? So usually the treasury bills and treasury bonds basically the rates are determined by the market usually, but sometimes you may have there are sometimes speculations of these things. So the treasury bills and treasury bonds, therefore, is an important gilt-edge and instruments. And the treasury bills are short term, and of course it's a treasury bill. You may recall now, you may recall treasury bills are money market instrument, selling at the 91, 182, and 365 days. Right? It's usually sell that. Those are having the secondary market. Then treasury bonds are usually from 2 years to 30 years. It's a long-term product. So since it's become a long-term, we call them as the instrument comes under what market? If the treasury bills market comes under the financial market, therefore the bonds comes under capital market. Now, if you ask what are the differences between treasury bills and treasury bond, what are the differences between treasury bills and treasury bond? Now you see the treasury bills are short-term, money market instrument. Treasury bonds are capital market and as well as the long-term, right? Treasury bills selling at a discount. What is that? Selling treasury bills are dealing at a discount mean? What do you mean by the discount? So now say treasury bill value is, if you buy for 100 million, so say 100 rupees for an example, right? 100 million. So you can buy it at a 90 rupees. That the difference is the interest rate, right? That's the rate. So treasury bill you buy at a discount. That's why you call you buy 10%. That means interest at maturity, right? Basically. So 90 rupees and you buy 100 treasury bill. At the time of your purchasing, you need to pay only 90. So that is discounted price. But as for the bills, it's not like that. Bills are usually you pay, depend now, say the value of the bonds are 2 to 30 years. Now, what you're getting in return? The return you're getting, remember, in depend on the time period, every buy annually. So you are getting sort of you want to say interest. We say coupon rate. So agreed amount they will pay you every 6 months till your bonds mature. Right? That's another important thing between the treasury bills. But treasury bills are have a separate regulatory provisioning, or I mean regulatory law. But whereas the bonds also you have a separate regulatory aspects about the bonds, right? So these are the difference between treasury bills and treasury bond. You know, Sri Lanka only 5% was allocated to foreigners to buy. Now I think it's increased to 10% also. The treasury bills and bonds, there's a limitation of buying by the foreigners, right? And now I think you have an idea about what is treasury bills and what is treasury bills, who sell, who initiated, what is the characteristics, right? Why these are import to the cashier, import into the investor as well as to the issuer, right? I think now you have ideas about what is treasury bills and what is treasury bond. Then also you know what you call the repurchase agreement. We call them as a repo and loss. Now repurchase agreements we call arrangement which involve with the sale of a cash or securities, usually government securities, at a specified price with a commitment to repurchase the same or similar securities at a fixed price on a specified date. Now say for example, now say seller. Now you say if you have money, example, if you have a money, so seller maybe, right, say your bank will, for an example, Pan Asia Bank, right, Pan Asia Bank. Now you want some loan, you need some loan, right? So therefore you use your government securities, right, say treasury bills for example, as a security, and you give it to that security to the lender of money, the money who is giving, and whatever cash they give. But there is an agreement. What is an agreement? At agreed period of time, so that means at maturity after the agreed period, so lender get the money back from the seller, say Pan Asia for example, right, and they give back again that securities to to the Pan-Asia. So now you noted that you always cash funds and cash. Now this is the repo transaction is always more than you're going to take it back, right? So cash funds and interest is more than what are you giving to him, right? Your repo rates, right? The difference between the sales price and the repurchase price is the interest income. Now, sales price is your green shows, that's the sales price, right? And repurchase price mean basically you get the red margin, right? So that is the money. So therefore, always your sales price is and the repurchase price is the interest income, right? Your repurchase price usually is higher than your selling price. A repo, therefore, is similar to a loan that is collateralized by your securities underlying in the agreement, right? Most repos are very short-term money market instrument. Remember, repos are money market instrument, less than 1 year. Now, if you ask to mention identify three short-term money market instrument, one is repo, other one is savings account balances, and as well as treasury bills. All you call them as a money market instrument. Now, suppose the agreement is called a reverse repo, mean that is the other way. That means seller sell their securities to seller loans and taking the money, security, and then seller will recall the money and for the give back the security, right? That rate is we call the reverse repo rate. Other report is called the repo rate, right? Okay, I think you have an understand about that. Clear? ඔබලන්ට තේරුණාද repo transaction එකක් වෙන්නේ කොහොමද කියන එක තේරුණාද? Kesha, you got it? ඉදිරි හරියට තේරුණාද? How the repo transactions took place? නැත්තම් කියන්න මම ආයෙ කියලා දෙන්න. ඔක්කොටම තේරුණාද? Anybody you want to ask me again how these repurchase agreements and repo transaction is taking place? I will explain. Otherwise, I assume that you understood these repo transaction. Okay, right? I hope keep quiet mean you understood. Kesha, Kesha, you have right? Okay, good. Right. Then we move into okay, go ahead.
Yes, sir.
What give that? Kiran, Harada Kesha, understood? Harada, Okam Harada, Lachan, right?
Yes, sir.
Right. Tahu Prashna kan? Chamod Harada.
Yes, sir.
Chamod and Nani. Mate the kata karan වෙන කාත් එක්ක. හරි. Chamod වෙන කාත් එක්ක හරි කතා. හරි come on. Okay, now we moving to another instrument, what you call corporate bonds. Sometimes we call debentures, sometimes we call corporate bonds. Now these bonds are, as you explained, these are another type of bonds. Now earlier the treasury bond issued by the central bank behalf of the government. Now these corporate bonds is a medium or long-term securities of private sector companies which obligate the issuer to pay interest and redeem the principal at maturity. So bonds also can be issued by the private parties. Now, okay, sometimes we call debentures are most popular corporate debt instrument in that case. Remember, these are issued by a well-respectable organization. Now, in order to buy these bonds, you need to trust the particular issuer, right? For that, sometimes the we may discuss about the ratings. Now, ratings can be done for instruments, rating can be done for country, and rating can be done for institutions. A rating can be done for your personal. I mean, usually we call them individually. We call them as an, unless the business, we call them as a credit scoring, right? Okay. Now, the corporate bond is a medium or long-term securities issued by the private sector. So, what are the characteristics of a bonds, or what are the characteristics of a debenture? Both are same, right? Basically, now usually you are getting higher interest rates. Usually, debenture also are basically like bonds payable on coupons you are paying. Now, debentures not like bond, right? Remember, the bond can go up to 30-40 years, right? 30 years maximum, sorry. Right now, you see treasury bonds are issued from 2 years to 30 years. But debentures are not so, big length. Why? Because now say if you issue 30 years for debenture by a particular financial institution, I mean, we don't know whether 30 years we are living or 30 years that particular organization is surviving. But as far as the government is there, no. As far as the state is there, as far as the central bank is there, you have a long term this. But for debenture is usually showing is with the premium with the coupon rate of maximum rate of 5 to 7, usually 7, right? Oh, go up to 10, that's what, right? That is what you call medium to long term, not like a bond, right? So usually those issues by some big organizations, especially banks, are heavily using in order to improve their capital adequacy ratio. So banks are issuing most of debentures. Now some of these debentures are tradable. You can sell it at the stock market. Some are not tradable. There are different types of debentures, like redeemable debentures. So right, secures in subordinate like that. So don't worry about this. There may be a difference. So these are some of the characteristics of a remember the financial instrument, right? So these are issued by basically the finance organization, or maybe some private organization to collect capital for their organizations, right? This is how these instruments are issued. Right, now having understood a little bit of debentures, I think now these are basically long-term products, therefore it's a capital market instrument because it's more than 1 year. Then you may have the stocks, even though I have not mentioned here. Stock also can be considered as a long-term capital market instrument. Now, if you think about stocks also, you may have two types. One is preference shares, where you need to pay dividends, either cumulative, or sometimes we have a normal common stock. Normal common stock, the dividends are paid when the profits earned by a particular organization, right? Now the stock, of course, have some benefits. Return in showing in basically in dividend form. You can sell these stocks in the stock market, where you suppose you purchase for 10 rupees. You can selling for 12 rupees, then you have a 2%, 2 rupees premium price. Sometimes selling sometimes you are selling stocks at less than what you purchase. And we discuss about bull market and bear market in the stock as concerned. But you need to know a little bit of all these things. These are the instruments in the financial market. Then you may have some other instruments we call commercial papers. Now these commercial papers, remember, it is not so popular in much in Sri Lanka. These instruments are usually issued by, again, private sector companies, maybe for short-term fund requirements, like treasury bills, like your overdraft, short commercial for papers also. You issuing for a short-term financial requirement by an issuer. So there are some commercial papers are guaranteed with collateralized and some are not collateralized, right? So remember, all will depend on the issuer, right? If your issuer is the creditworthiness, right, basically, you don't want to pay high interest. Usually with the short-term instrument, you need to pay a little higher instrument, and this depend on your creditworthiness, depend on your regular, depend on your reputation, and we are easily can sell it the commercial papers. Usually for 9 months, as I told you, it is not so popular in Sri Lanka. And important character about the commercial papers, mind you, we discussed. Right, we discussed treasury bills and treasury bonds. Now we discuss treasury bills are selling at discount, and treasury bonds are usually selling at this interest bearing, that is coupon rate. But a commercial paper, it can be both ways. You can sell the commercial paper either on discount basis or maybe some interest bearing. Both ways you can sell the commercial paper. Commercial paper, one you. It is an, as I explained to you, it is basically a what instrument, and it is we call them as it's a short-term instrument. So therefore, those things that comes under money market instrument, right? I think now you have an idea about the commercial papers, right? Commercial papers. Also, you have an idea about the commercial paper as such. Right. So then you learn about the treasury bills and treasury bonds, and then you discuss the deposits, instruments like savings, FDs, and demand. And now you learn about commercial papers, and also you learn about the debentures, and also you learn about the commercial bonds or corporate bonds, and then also you learn about the shares little bit of, right? Okay, so you learn about the shares, and these are the some sort of instruments, right? Financial instrument, and you need to know about the features, characteristics, how these financial instrument benefit to you, how the financial instrument benefits to the bank, what are the risks faced by both parties of dealing with this type of financial instruments, right? So that is why thereby you improve your literacy level, right? We discussed last week, our literacy level is, when you think about our other literacy level, writing and reading is very much less, almost 60% less than the our normal reading and writing. But when this comes to the financial literacy, and then there's another important thing, so we call them as the derivatives. Right now, the derivatives mean අපි කියනවා සිංහලෙන් මේ ව්‍යුත්පන්න. ඒ කියන්නේ තවත් එකක් මත තමයි මේක හැදිලා තියෙන්නේ. So the derivatives are financial contracts, right, or financial instrument rather. These most values are basically something else, underlining. තවත් එකකට සම්බන්ධ කරලා තියෙන්නේ. Right? Now, the underlining of which the derivative is based on an assets, commodity, equity, stock, loan, residential mergers or bonds, and index, or it is linked to certain thing. right? That is what you call derivative. So therefore, derivatives are financial contracts or maybe instrument, right? Values are derived from the value of some period, right? Where that ඒක හරියට මේකත් නිකන් financial derivative එකක් තමයි හරියට අම්මා තාත්තා ගැන හිතලා හරිද දුව කසාද වදිනවා අම්මගේ ගතිගුණ තාත්තා ගැන ගතිගුණ. So derivatives are financial contract or financial instrument whose values are derived from the value of something else. දැන් දුව බැරි කරන්නේ තාත්තයි අම්මයි ගැන. ඒ උන්ගේ තිබෙන ගතිගුණ. මේක හරි risky product නේ, right? ඒ වගේ තමයි මේ instrument basically financial derivatives are usually highly risk products, but return also high, right? So there are two types of financial derivatives. Now you can sell it dealing with these financial derivatives either over the counter markets or the exchange. Now say for an example, a certain financial derivative instrument you can just take over the counter. Now over the counter means you may telephone and computer link network of the dealer, so you have entered into a contract, right? So trades are typically much larger than the trades in the exchange traded market, but there are some financial derivatives you can sell it only from certain through the exchanges. Now there's nothing much differences. Now exchanges mean you may have a certain exchange body to do the transaction. Somebody intermediary is there to purchase those certain financial derivatives. But certain financial derivatives you can take it from over the counter, right? So financial derivatives, mind you, overall those are risky sort of a product, and most of the time we are using financial derivative to mitigate certain risk. Remember, now we usually use the financial derivative usually to mitigate certain risk, right? Just to prevent we are exposing to risk, we may go for usually the financial derivatives product. Now common financial derivatives we may identify, we call the forward contracts. Now forward contract is basically, if you look at it, is a contract. It's a simple derivative as I explained to you, and it is an agreement to buy or sell an asset in a certain future time for a certain price. Now all the forward contract trade done over the counter, remember, usually between the two financial institutions or between a financial institution or a client, right? Now forward contracts on foreign exchange are very popular in Sri Lanka and can be used to hedge foreign currency risk. Now very famous one, right? Now the forward contract, suppose if you want to so especially the international business, right now say I sell some item to the foreign buyer, right? But money is coming right now. Say for an example, you work it out the pricing for foreign buyer. I'll just give you an example. So you enter into a contract of sale with the foreign buyer, saying that okay, I'm going to buy tea, for example, tea, right? So I am the tea manufacturer, the tea company. So my tea is going to purchase by Russian company, right? Think about it. Now, so the Russian company, according to the international trade, they ask for the pricing for 1 kilo of tea, right? They say $10, example, yours $10, 1 kilo, right? So you enter into contract and you put an agreement, right? And then you may open an LC, right? The Russian company may open an LC and send it and inform to the particular bank in Sri Lanka, corresponding bank, through the bank as well as to the customer. So you get to know the confirmations of your order. Then you know agreed price. Now what happens? So you need to manufacture all your tea, all right? So you need cost for that. You mention you spend a lot of money for that. Say you look at it. So here's the $10. So your cost of production for your tin packaging is costing $9 for 1 kilo. But you are selling at $10, but only $1 is your markup. Right, now you agreed on that, you are sending. The once you export the items to the Russian guy, remember the Russian guy send you the money after 3 weeks, after 3 months, for example. That is your agreement. We will pay because the bank undertook the guarantee. No, now that is what Sri Lanka we have. We are a People's Bank, black අසාදුලේඛනය කියලා තියෙනවා කියලා. එතකොට මොකක්ද වෙන ප්‍රශ්නේ? එතකොට දැන් අය ට්‍රාන්සැක්ෂන් එක කරලා තියෙන්නේ බැංකුවනේ. එතකොට බැංකුව අසාදු කළා කියන්නේ ඒ බැංකුවෙන් ඉෂුව කරන ඔක්කොම LC ගණන් ගන්න නැතුව යනවා. ඒ කියන්නේ බ්ලැක් ලිස්ට් කරනවා කියන්නේ. එතකොට ප්‍රශ්නයක්. reputation against People's Bank and Prosperity. Okay. Otherwise, normally, so the bank may, of course, there may be some country risk and all things are there. But suppose if you are working in according to the ICC rules, right, international commercial loans rules, ICC rules, right? So you are adhered to do certain principles. Right now, say you are getting the money after 3 months. After 3 months, right? You are selling at $10, right? Now you look at it. If the dollar depreciated, though sometimes, right? So once you get then imports, right? So the dollar prices has come down. So then what happened? You are getting after 10 months, 3 weeks, the dollar has come down. Your price is, say, now is not worth. So therefore, you spend more than that to purchase these items. So in order to prevent that risk, what happened? We go to the bank as enter into a contract with a bank. That contract is forward contract. So that means irrespective of the bank, the dollar is now 230, for example, 230, right? So you enter into a bank, okay, 230, agree this certain amount. So suppose the rate has gone more than, less than that, you give the money to the bank will agree to give the agreed dollar rates, right? If that fluctuation is going to absorb by the bank, when bank will decide the rates, bank will calculate all these things, right? And it is a forward contract. So through the forward contract, basically safeguard the currency risk of the issue, right? Then you may have the future contract, but there is nothing difference between the future contracts as well as the forward contract. So what is the difference between the future contract and the forward contract? Is basically, now these contracts, earlier one has taken place over the counter, but future contracts is usually going to take place in the exchange, right? That's the difference, right? There may be a standard of features of contract. There are standard way of handling payments and all. In that case, is you go through the for future contract. Both are same, but only different is all these contracts are taking place through the exchange, whereas the forward contracts, or you can go over the counter. Then you have options. Now options mean that is you can do it both ways, right? Through the exchange or over the counter. Now options mean, so there's an options given to you. Either you can withdraw your agreement, or maybe that's basically talking about you can withdraw your agreement. You have options to not to enter into a contract. That is called options. Now there are two types of options you noted. The two types of options are call options and the put option. Call options give the holder the right to buy the underlying asset by a certain date of a certain price. So give you, okay, I will buy. Put options give the holder the right to sell the underlying assets by a certain date of a certain price, right? So you are having the option. So option means, so you can withdraw from that agreement. But remember, if you withdraw, you have to pay premium, right? Because that risk is going to take by that bank. So therefore, you need to pay a premium. Premium means they talk. Now these days, you noted that even yesterday, people are talk about petrol gas matter. Some chairman came to the media and said, you know, we can't buy cheap gas because of the contract enter into us like that. So sometimes maybe we'll see, but then what to do? So we have to listen what they're telling now, right? So that is why the gas price is high, because they in the position to get the low price gas, but since we are entering into a contract, therefore why we can't get the gas in low price, blah 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 blah, everything, right? Okay, so we don't want to talk politics. Then the financial derivatives, that's the option. And also we had another financial instrument we call the structured finance, and that is what you call asset-backed securities. Now don't confuse, I just simply try to explain what is this asset-backed securities, right? These are also derivatives, right? Try to simply understand. Now here how it works. It's a very famous instrument during 2008 2009. It's a very famous instrument in developed world, right? It's a very good instrument. So what is asset-backed securities, or sometimes we call securitization? It's like, it's worked like this. Now there are some you give a loan, you gave loans to different parties. You as a lender, you give loans to different people, right? Okay, so you give loans. Now you are expecting receivables, that mean installments. Your loan, the loan got to making hambironi is salli hambino, right? Eva topic, you know, receivable, right? Eva receivables. Clear? Then on එක ආයතනයක් මම සරලව කියන්න, එක ආයතනයක් ණය එක instruments දීලා තියෙනවා එක අයට. දැන් මම assume කරනවා, මම හිතන්නකෝ මේ වගේ, දැන් මට තියෙනවා කාර් 4-5. right? ඔන්න හිතා ගන්න සරල විදියට මට තියෙනවා කාර් 4-5. මම මේ කාස් ටික රෙන්ට් කරනවා. මම මේ කාස් ටික රෙන්ට් කරනවා. මේ කාර් පහ රෙන්ට් කරනවා. එහෙම ගමුකෝ. හොඳට තේරෙන්න. I have 5 cars. I'm going to rent these cars monthly. So what I am expecting by granting these or giving these cars to rented purposes, I am expecting certain monthly income. But you know, in the car path, no, ආදායමක් එනවනේ. ඒ එන ආදායම මම මොකද්ද කරන්නේ? pool කරනවා. pool කරලා මම කියනවා SPV, special purpose vehicle කියලා තවත් අක්කලෝට කියනවා. මේවා එක එක අයගේ, මට Mercedes car එකක් තියෙනවා, මට තියෙනවා Maruti එකක් තියෙනවා. එතකොට ඒ ගණන් වලින් මම ගන්න වෙනම fees නේ. තේරෙනවද? උදාහරණයක් මම. එතකොට මම කරන්නේ මේ මගේ income එක පෙන්නලා, මට එන ගණන් පෙන්නලා වෙනම ආයතනයකට කියනවා. මේවා ඔක්කොම ආදායම් නැවත වරක් එකට හදන්න, ඒවා එක එක ණයේ ඒ ස්වභාවය අනුව ගන්න කියලා වෙනම instrument හදන්නේ කියලා. Right? එතකොට මේ එක instrument එක rating company එකකින් rating අරන් මම විකුණනවා තවත් කට්ටියකට. එතකොට මම මේ විකුණන්නේ මොනවද? මගේ receivables. මට හම්බෙන දේවල් මම තව කාට හරි විකුණනවා. ඒක කරන්නේ කවුද? special purpose speaker කරනවා. Right. එතකොට දැන් මම ඉන්නවා වෙනම තව issue. Right. එතකොට දැන් මේවා ඇවිල්ලා these ABS are interest bearing instrument and are often enhanced through the use of guarantees or insurance. Right. Okay. Then now you look at it think about that example into the banking situation. I have given loan, right? Asset backed bonds collateralized, secured by mortgages, loan or other receivables. Typically, the issuing institutions sell mortgages, loans, instrument credit card, or other receivables to the trustee of special purpose vehicle, and in turn, this SPV sell it and pool them into the different groups and different slots and obtain the credit rating and sell these instruments to another party. That is what you call securitization, so asset-backed securities. But high income, but high risky product. The product is not successful if my original money is not come to me, right? So my other products also going to impact, right? Suppose the original systems, if you gave to loan to the subprime customers, right? If these people are not pay back my loan, so my අර මම දෙන්නම් කියලා ගත්තේවත් නැති වෙනවා. දැන් මම මේකත් හරියට මේ වගේ හිතන්න තව විදියක් මම කියන්න. මම කෙනෙකුගේ ලෝන් එකක් ගන්නවා මම මෙන්න මේ තැන් වල තව අයගේ ලෝන් මම හිතන්නකො මම ABC කියන පුද්ගලයෝ තුන් දෙනාට ණය දීලා තියෙනවා. මං ඔය හම්බෙන ණය හිතලා තව ණයක් දෙනවා තව කෙනෙක්. මේ ආදායම හම්බෙනවා කියලා. right? එතකොට මම දෙන්නේ මේ තුන් දෙනාගේ මට හම්බෙන පොලිය 90. හිතන්නකෝ මට මේ තුන් දෙනා හම්බුනේ නැත්තම් මොකද වෙන්නේ කියලා. මම දෙන ණය ඒකත් බලපෑමක්. right? මම ගත්ත ලෝන් එක ඒක අනුව තමයි මම ගන්නේ. So these are we call structured finance. So remember all these products are very complicated. But one time is a very famous thing, especially in the developed countries during 2008. Sri Lanka is not so powerful this type of instrument. These instruments we call them as offline balance sheet activities. You cannot show these things in the balance sheet, right? That is what we call off balance sheet activities. All these off balance sheet activities are put in your accounting statement or financial reporting or maybe financial accounting or annual report as a footnote, right? So therefore, when you want to look at it, the financial positions about in any organization, you need to look at it your balance sheet, your account statement, as well as some footnote also, because some things they are mentioned there. Yeah, it is not displayed in your normal financial statement, right? Clear? Right. Then you noted these asset-backed securities are very risky product, but Sri Lanka is not so much happening in this type of product. We call this as ABS, asset-backed securities. We call structured finance, right? So these are novel financial instruments, but high risk. Remember, those are high risk financial instruments. Then you may come across a little bit of unit trust. Now you know the unit trust is it's basically there are some companies who sell the unit trust. Those are comes under Securities Exchange Commission Act, right? As a regulator. Now, what is unit trust? There are three parties for unit trust. Right, one party is the customers, that mean unit holders who purchase these units, and there are some people who pool these unit trust units or trusts and bring the big fund, and these funds may be invested in different investments areas, right? There are two parties. That's the investment company or unit trust company who sell the trust in, take some decisions to earn some yield. Then there's another party in the unit trust, that is what you call the trustee. Now, what is trustee's job? Trustee is the third party. Now, trustee's job is to see whether these unit trust companies are using the customer's unit trust in a better high yielding investment. So they are simply whether they are managing the fund is prudently or not. That is what the trustee. So there are three parties. Now, one of the important factors in unit trust, you are usually selling at 10 rupee trust. The unit value is usually 10 rupees. Now, if the moment you say 10 rupees means, I mean, everybody can purchase for 10 rupees, right? So therefore, unit trust is a collective investment. Good unit trust purchase කරපු අයගේ නැත්නම් invest කරපු අයගේ සල්ලි ඔක්කොම එකතු කරගෙන pool කරනවා. That is what you call large pool. සතෙන් සතේ එකතු කරනවා වගේ රුපියල් 10 කෑලි වලින් එකතු කරගත්ත unit trust හැමෝගෙම අරන් ඒක එකතු කරලා ලොකු එකක් හදනවා. දැන් අර company එක එහෙම නැත්නම් unit trust company එක මේ pool කරපු සල්ලි එක එක තැන්වල invest කරලා yield එකක් ගන්නවා. මේලකින් තමයි dividends ගෙවන්නේ කාටද? අර unit trust holders ලා. Of course, company also keeps some margins, right? And this is how the unit trust work. Now, this fund is divided into units, each worth a certain amount of money, right? When investing in a unit trust, money buys a certain number of those units, right? So the fund manager or unit trust company uses the money in the fund to invest different type of investment, right? They also are correct, right? So therefore, that is how the unit trust companies are working. What is the return to the customer? Unit trust holder dividends, right? As well as you can sell the unit trust, whether you purchase for 10 rupee like share, you can sell it 12 rupees. So then you get a 2% margin. That is what you call the capital gain. You 10, you sell it at 12, so you get a 2%. Apart from that, you are getting dividends. Dividends from me. So pool money invested, you earn, and earn that profit will be distributed among unit trust holders, right? So in Sri Lanka at the moment we have around 114 unit trust management companies, management companies in Sri Lanka, and the around not much customers, you know, it is around 50,000 less than that amount other unit trust customers. Right, so we don't have a much unit trust organization, right? I think now you know what you mean by a unit trust and how they earn funds. Now, from where they earn funds? From again depositors, not deposit. We call the unit trust holders. Unit trust, right? Okay, right. I think you have an idea about these instrument. These are we call investment instruments, right? Okay, before I move into next area, okay, have you clear now? Okay, clear there. Okay, any questions? Right? Have you clear now? What is unit trust and all? Malindu? Okay, Madhushan? ඔක්කොම නිකන් ශාන් ලයින් නේ නේද ලක්ෂාන් මදුෂාන් right okay තේද තේරුණාද මොන හරි අහගන්න තියෙනවද මොන හරි එකක් අහගන්න තියෙනවද මේ financial instruments ගැන investment instrument ගැන you want to ask anything right any clarification you need to the not necessary understood clearly right okay හරිනේ මම assume කරනවා තේරුණා කියලා නැත්තම් අහන්න right මොනවා හරි ප්‍රශ්නයක් තියෙනවා අහන්න so I'm trying to clear it all these things right then we going for another instrument what you call the we go for another instrument we call next instrument advances now we call borrowers now we discuss depositors then we discuss the investment of course you know investments are three types no some people are risk lover mean what risk lover mean people who going for high yielding instrument they try to invest in high yielding always very now if you have a risk arapige unandwa කියලා කියන්නේ එක එක කට්ටියට නේද so they are the risk lover අවදානම් ගන්න කැමති customers so they are going for always to go and take some high risk but you know the principle higher the risk higher the return higher the risk higher the return so risk lovers going for that but there are some people risk averse or move risk නම් බෑ ඔයා මට හරියටම රුපියල් 100ක් දෙනවා නම් පොලිය මං ගන්න නැත්තම් බෑ right එතකොට ඒගොල්ලෝ ඒවට යන්නේ I am expecting certain fixed return so therefore risk averse they don't want to take extra risk right so there are two types of customers there are some customers you know risk zero that means risk neutral ඒගොල්ලන්ට risk ගන්න ඕනෙත් නැහැ අඩුවෙන් ඕනෙත් නැහැ වැඩියෙන් ඕනෙත් නැහැ මේ මට මේ තියෙන එක ඇති ඒ වගේ right so usually there are different type of investors risk lover risk seeker or risk averse right so based on the type of the person right risk appetite එක අනුව තමයි එක එක financial instrument they going to buy right that's something related to the investment there are some type of customers we discuss advances sometimes we call loans so you know there are two types of loans you can advances you can identify one is the direct advances other one is indirect advances now what is the difference between direct advances and indirect advances right direct advances is usually what happens the money is out from the bank is money is going out from your balance sheet that is called the direct advances the moment you give loan money is going out from the bank right that is direct advances like loans for consumption purposes personal housing loan commercial projects pledge loan whatever you call them as is money going out from the your organization right so these are we call overdraft credit cards pawning right also direct advances loan against deposits but there are some advances these are we call indirect advances now indirect advances mean but money is not going out from the bank right money is not going out of that is why we call the balance sheet activities these are off balance sheet activities because money is not going out from the bank but there is a liability what is the liability now example like letter of credit LC shipping guarantee or letter of guarantee or whatever your bank is giving to the third party provided that my customer is not fulfill your obligation I will pay you so therefore till such time if you have not paid money is not going out from the organization if you breach only the money is going out right now say letter of credit now behalf of my customer I'll take the responsibility there are some letters of guarantors we call bid bond performance bond different type of bonds no if you are not performing I will pay you, right? So indirect advances. Now, from where you can get the interest advances, right? Okay, so letter of credit or guarantees like bonds, performance bond, bid bonds, all are shipping guarantees, all are is called indirect advance. Those are also an advances, but money is not going out. If you bridge, only money need to give. But here in the direct advances, the money is going out from your balance sheet, out from you. That is what you call type of advances, right? So you may have a different products like housing loan, then you may have a different consumption loan, personal loan, right? You may have a various purposes you will take advances, right? Out of all, I think the LAD is the most secured for as far the bank is concerned. Why it is more secured, right? Why it is more secure? Because you are giving the customers money, loan against deposits, right? So that's the most safest loan bank can give, right? All this money is moved out from the bank. So different type of overdraft, pawning, right? So leasing, right? All our money is going out from the organization, right? But it's depend characteristics of each and every product and services. Now, housing, if you look at the housing, usually long term, and there may be a short term loans. Overdraft facilities are given. Overdraft facility, there are two types of overdraft, whether it's a temporary overdraft and permanent. And apart from that, sometimes banks give a casual overdraft for the customers, depend on their credit worthiness or depend on the relationship they have, right? So overdraft is usually comparatively higher rates, but that is in order to fulfill the short-term liquidity problem is done fulfilled by customers to obtaining overdraft. To have an overdraft, the principle, you need to have a current account. So just because of you are having a current account, you cannot request the overdraft, right? Overdraft issuers is purely depend on the banks and what is the relationship customer you had with the bank. Based on that, bank can arrange overdraft. And remember, we discussed all the deposits are payable on demand by the bank, but whereas the overdraft is concerned, payable on demand by the customer, not any other bank or not any other loans, right? Overdraft is payable on demand by the bank, not bank customer. The bank payable on demand for all the deposits. And by overdraft එකක් issue කළාන් පස්සේ බැංකුව a customer payable on demand. ඉල්ලන්න ගමන් give it, right? That's what, not like any other loans. Right. So I think now you have an idea about the advances and sort of a different type of advances and indirect advances. I think you have an idea, right? So these are some of the instruments available in the market you to take. So if I'm going to discuss about different type of loan, you need to know about what are the features about these advances. Loan type, what are the features? What is the purpose of buying these loans, right? And what are the risks of giving this loan to customer? And what are the risks faced by customer in obtaining these loans? Various purposes, some characteristics all loans are having. Right now, for purchase customer, for a car, we call auto loan. If you want to send some goods to another country, so you need some money for buying raw material, for processing and things like that. Also, you can take some export packing credit. Suppose if you want to take some LCs and you open LCs, but you want to take some loan to settle and open LC. Now we call them as import loans. Likewise, different type of loans available to suit the customer's requirement. Right. So these are type of advances. Those are financial instruments. Now, to be instruments in the smooth functioning of financial systems, we discuss about the financial market, right? Buyer and seller. So in order to buy and sell, what you need? You need instrument. So those are the instruments, either borrowing, lending products, or either deposit product, or investment items like that. You need some instrument, financial instruments to money market to be actively taking place, right? Okay. So now, having understood that also, now we move into another area. So we have discussed now so many things in our study. What is financial system? And we discuss the component of the financial system, right? So we discuss all these components in the financial system. We discuss central bank, right? And then we discuss the regulatory authorities, other regulatory authorities other than the central bank, and we discuss functions and all these. And then we discuss the different type of market, capital market, financial market, right, debt market, stock market, then foreign primary and secondary market. Then we discuss about the lot of markets we discuss, right? Then we discuss about the infrastructure, especially the payment methods. What are the payments methods, low cost and high cost payments instrument we discuss. Then we discuss the institutions last week. What are the institutions which consist in the financial system? What are the assets based? How they categorize? What we discuss. And finally, we discuss about the instrument. What are the instruments available in the financial system? So these are, we collectively call them as a component of the financial system. As well as we also discuss the safety nets also, right? How the financial safety net facilitates smooth functioning of financial systems. While we are learning that, we discuss why we need to regulate the importance of everything to have a better financial system operation in Sri Lanka. Right. Okay, clear now? I think up to now you understood all these things. And then we also now learn what is financial system and what are components of the financial system. So we have two small areas. Then we are going to discuss a final episode, role of the financial systems in financial system stability and financial crisis, right? Okay, now let's move into a little bit of that, right? Okay, where we are going to discuss about the role of the financial system, right? Why the modern financial systems provide following services. What are the services offered by the financial system? One is as an intermediary, right? Now, as we explained, the main functions of a financial institution, transferring resources between savers and borrowers, providing the credit, right? That's an intermediary job. The financial system carried out through financial institution. They carried out intermediary jobs, right? Collecting materials from or resources from needy people, the excess people, and give it to the needy people, and that is from savers to borrowers, and that's the one functions, or that's the role performed by the financial system. right? And then value exchange, that's important thing. The financial system making payments and serving as a clearing system, right? So value creating for exchange, facilitate the exchange, right? Smooth functioning of operations of financial instrument, right? For that you need to pay payments. Now payments also major aspect of component of a financial system. So through that, the value exchanging, like we have a you see, we discuss about the bulk payment methods, and then we look at it, the low value payment methods, example like RTGS. Then we discuss about the check clearing, and then we discuss about the SEFT methods, SLIPS methods, sharing ATMs, all are payment methods. So every time what happened, add value for their exchange. That is value exchange. Then the liquidity, right? Now liquidity, you know, as and when the bank need money, so we need to settle certain short-term things. We need liquidity, right? Now liquidity mean is basically converting assets into cash. So banks systems must, in order to function properly, it create the liquidity into the market, right? So we discuss about the monetary mechanism system through the role. One of the role of a for central bank is monetary mechanism, monetary policy. If the liquidity is not available in the market, how central bank use their monetary policy instruments to provide the loan. If you have a more liquidity market, right, and how they bring back to the money back again to the out from the systems, like that we discuss in detail. And also we discuss about the pricing, how to identify market pricing properly. Then we discuss again the risk of transforming risk among now between institutions, right? That's one of the objective, the role of a financial system, right? So these are some of the roles or functions of the financial system, right? And also provide information to both parties benefited. Now, not to have a provide information only to the particular one party. So therefore they are resolving information asymmetry problem. So if you want to get a good decision in financial system to be very effective, both parties need to know about the information, right? So therefore, through role of a financial system and it resolving information as asymmetry problem, that means generating and distribution information between buyer and a seller, both parties. So these are some of the role played by the financial system, right, in a country. If you perform all these things, of course the economy is doing well. Now these roles facilitate for financial system stability, right? Our system is stabilized only, right? We are basically have a good financial system. Now otherwise what happened, so we are subjected to, right, lot of external internal shocks. If these shocks maybe destroy the stability of the financial system, so therefore a safe and secure financial system which is able to withstand external and internal control shock, any internal control shock, right, any external shock, still at the moment we have a financial system stability. The system is okay, right? If you have a good stable financial system only, favorable environment for depositors and investors. If your stable financial system is not stable, I mean people think twice to whether to deposit the money in the financial system or investors to come and invest the money in certain projects or buy some financial instrument. So all matters about the some factors contributing. Now say for Sri Lanka, the ratings. So it's matter to a stable financial system, right? Okay, so good stable financial system, what happened? Encouraging financial institutions and markets to function efficiently and effectively. Now I keep on telling financial institutions to be actively take place, to be efficient and effective, must have a better markets, right? Still we are not developed, but at least we are maintaining a good efficient operation, right, by the financial institution, as well as the financial system stability promote investments and economic growth, right? So country to be economically growing, and you need to promote investment, and if you want to improve our economic growth, we need to have a financial system stability, right? So these are some of the importance of financial system stability, right? So if you are not trust and confidence of the customers, the financial systems is not. So therefore, we discuss now very briefly the role of the financial system and financial system stability. Right now, you know what is financial system, like our human body, then what are the components of financial system, like our body, our subsystems and all. So what are the component financial system and what is their role overall, right? What is the role of the financial system, right? And financial system stability. Okay, so that's what we discuss. And some instances, you may destroy the stability. Sometimes you may destroy the stability. Why? Because of certain crisis, right? Because of certain crisis, sometimes we may lose the stability, right? Because of certain time, right? We may lose the stability. Right. So therefore, as I explained, the central bank is the responsibility of the system stability. So central bank taken a lot of steps to ensure that the country's financial system remains stable. So for that, what they do, as I explained to you earlier, what they have done for maintain the financial system stability. One, regulating and supervision by the rights. Okay, one thing is. Second, macroprudential surveillance. Now that means, so they have taken some observe the financial and monetary system and the use of specific set of tools to limit the systemic risk, right, disruption. So that means, so they take actions, look after not to have a systemic risk, right, not to have fail of any of the institution out of 30 or what you call, right? So they take some macroprudential surveillance. They have taken steps to not to have the systematic risk and disruption on the financial services, right? They take. Then resolutions of failing financial institution. Suppose if a financial fail, certain institution, the action they have taken to safeguard the interest of the stakeholders, like offering safety nets, like issuing guarantees and issuing deposit insurance, all are resolving failing financial institution. They try to revamp these financial failing institutions, right? Okay, then, so they look at it also, money, financial market infrastructure approach. right? So how the money market operations through maybe the payment systems, how banks are dealing, all they are monitoring, right? And finally, we'll discuss, they provide some framework for system stability by providing safety nets. So these are how central bank looking the financial system stability. Right. Last 10 minutes. So we are moving to the financial crisis. If everything is not happened as not there may be a possibility of a financial crisis. Of course, the financial crisis, mind you, not new to the world, as there are many times occurred from time to time, right? The financial crisis, some sort of a crisis took place from 16th century, but the out of all, there are three main documented crises. There are enough crises took place, right? But there are three main documented crises took place in the world. That is in 1930s. We call them as the Great Depression, right? Great Depression. That's the first one. People are talking now. This is not after the World War, during the World War, and that is what you call global financial depressions, right? That is took place in 1930s. That's the world Great Depression we call. Then after that, 1930, so after almost 67 or 67 years, yeah, okay, around 67 years after the first main financial crisis, now we had the second main crisis, that is what you call Asian financial crisis between 1997 and 1998. In fact, this crisis took place only in Asian countries. That is what you call that is why it is called as an Asian financial crisis. Now, Asian financial crisis, which took place in these countries, Thailand, South Korea, Indonesia, Malaysia, Singapore, and all countries, that is also due to the fact of the fact is basically reason is basically, if I want to categorically mention what happened, this crisis is a crisis caused by collapse of the currency exchange rate and hot money bubbles. We call them hot money bubbles. So what do you mean by a hot money bubbles? Mean you bring more more attractive opportunities for investors, right? So these guys want to try to earn money quickly during this financial crisis. Remember, USA economy is not doing well. A lot of investors are moving to the financial Asian markets, invested their money in their instrument and try to earn profits, right? So during that time, these countries are developed because they have enough money and all. Then suddenly, after the USA market come to the normal, what happened? The people who have invested in those countries took the money and went back again to the American market. So then what happened? Suddenly there is a huge financial vacuum created in these countries, Indonesia, Malaysia, and like, right? So then that is the reason why the reason why these financial crisis took. එනට වැඩිය සල්ලි ගන්න අපි ඉන්වෙස්ට් කර ගන්නත් හොඳ නෑ නේද? Right? ඒවා ගත්තොත් ඒත් කචයි. So this is what happened in the Asian crisis, right? Okay, right. Then what happened? So then in financial crisis took place in 2007 and 2008 in all these big countries, Western countries, right? A lot of famous big countries collapse. All right, bank crisis took place. Now, example, the Northern Rock Bank people just move in, wish to their bank and ask the money. Bank of America collapse. Lehman Brothers collapse. A lot of big organizations in USA's crisis collapse. So, what are the reasons for that? Right now, one reason is subprime housing loan in USA. So that means loans given to customers, they are not good customers, right? They not pay back the loans, right? That is called subprime housing loan in US. In US, a lot of loans were given to customers who are not good customers, right? There are two types of subprime customers and prime customers. The loans given to the subprime customers and they want payback, right? That means the quality of the loan has deteriorated. Then issue like structured finance and loan resale, like I explained to you the certain products, certain derivative products we discussed, securitization, we are selling the loans, expecting receivable. So that also collapsed, right? So they have a lot of unregulated shadow banking system. Bank වගේ ඉන්න තවත් බැංකු මූල්‍ය වෙළඳපොළ ක්‍රියා කළා, right? And a lot of people are lost the trust and confidence, and then creating the loss of the trust about the credit rating agencies. The rating agencies rating given by them are not the correct one, right? And as a result of that, the lot of financial market collapse in the 2007. That is the third crisis. Right now, you noted that now all these crises, especially the second and the third, now we have a separate crisis. That is a pandemic. That also crisis. That not because of the finance, but that because of that financial problem came, but that global crisis, that pandemic crisis took because of people, right? Not because of financial system. As a result, it will impact the financial issue, right? So what we noted about this crisis, we noted about all these crises. All these crises, if you really look at it, because of the failure of financial system stability. Right now, final statement I'm going to give you. Now you noted that all these things happened, all these crises took place if your financial systems not properly managed. If the stability is not there, there may be a lot of crisis. Right? So with this, I think I'll be end up today. So I think I have given you some understanding about the financial market, system stability, how it works in an organ, how it works in the country, financial system, what are the components, right? How these components are contributing to this, right? If not, what happened, right? So we end up with some crisis, right? Okay, I hope I have explained to you during this 8-hour period. So I may join maybe another session. We discuss about some other area. I can't remember what area, maybe a little later on. Right. Okay, now have you understood? Now I'm going to wind it up today. I think you got some idea about what is financial system, a fair knowledge, right? I will just go one by one. Idunil, you're okay? Final episode, right? Idunil,
Okay, sir.
you're okay?
Yeah.
Idunil? Right.
Yes, sir.
Right. Which bank you put? It's okay to discuss.
No, I am working in an insurance company.
Ah, good. Insurance, good. Kesha? So you okay? Yeah.
Yes, sir. Thank you.
Yeah. I don't want to ask from you which bank you are. It's okay to tell me?
Yes, sir. I'm from Head National Bank.
Okay, HNB. Good. Lakshan?
Yes, sir.
Lakshan, you're from which bank, you're Buddha?
International Bank, sir.
You also HMB?
Yeah.
Okay, good. Madhishan?
Yes, sir.
Right. You're okay. You understood. You got something.
Yes, sir.
Right. Thank you, Madhishan. You're also from which? You're from
PABC.
PSC, right?
PABC, Panisha Bank.
Yeah, PABC. Okay. Malini, you also from PABC? Malinu?
Yes, sir, from PABC.
Right. Good. I think you got also, right? Mayura?
Yes, sir. Yes, sir.
Gayatri? You're
Yes,
from
sir.
which bank? Buddha?
HNB, sir.
Huh? HNB?
HNB.
Right. Okay. Good. So you got something today, or and with my first two lessons, I think
Yes,
you have
sir.
an
Yes.
idea about something, no?
Yes.
Niranji?
Yeah.
Niranji? Niranji? Okay.
Yes, sir.
Right. So you are from also financial. You are DFCC.
Bank
Right?
of Ceylon.
Bank of Ceylon. Right. Okay. Okay. Thank you. I think so. I'm going to wind it up now. I think you have some idea about what is what is a banking systems and financial system, right? And this will help you to learn your other areas, right? I think next week Mr. Nawaz is going to discuss about some credit issues, and we will discuss again. I may join with you another session. I don't know when. They will inform to you. Okay, right. Thank you very much, and so we'll see you another day during your course. Okay, thank you very much.